Okay, welcome everybody. So this is a big event today. This is Tesla's Q4 earnings call. What's going to happen is that normally 30 minutes from now, Tesla will drop the financials for Q4. It should also have the full year for 2024. We will dive deep on that. We will show that page by page, and we have the best panel here of the best Tesla retail analysts to examine that, tell us what we're expecting. And then around 2:30 Pacific time, that's when Tesla will do a live show. They will do the phone call. We're going to listen in. We're going to play that, stream that directly here, and then we'll do a post analysis of what we heard. So this is usually quite fun, quite interesting. We don't know what's going to happen, but take a look at this panel that we've got here together. We got the best Tesla retail analysts here. You got Brian White from Futuraza. He's the guy that knows the most about the factories and everything that's going on with manufacturing and so forth. You got James from Invest Answers. This is the best Tesla retail analyst that's out there. He's got always comes with the right analysis. There's lots of choices, but you're the one that's here. Then we've got Larry Goldberg, obviously regular on the channel, also very, very good. And he also does financials and he tracks everything. So I'd be curious to see where he's at today. And then we got Simon Hill, portfolio manager for a financial advisement firm called Wellington Altus. They manage $40 billion in funds. Thank you so much, guys. Appreciate all of you joining us.
It's great to be here. What an exciting day. There's nothing going on with Tesla. It's a busted growth story. This year's going to be quiet. I mean, sure, there's the Semi and the Cybercab and Optimus and Dojo and I guess the more affordable model. And we're seeing cars driving themselves at the factory. But, there's really nothing going on, nothing to be excited about.
Yeah. We got Jeff Lutz going to join us very shortly here, and Alexander Mertz as well. And maybe we'll have a few other faces. But let's get started, James. What are you thinking about this Q4? Are you excited for it? You just told me before the show that you're actually pretty optimistic about what might happen afterwards in terms of the stock. What you're thinking?
Yeah, so normally there's a run up before earnings and then the sell off after earnings.
Right.
Q4 historically is killer. It's the strongest quarter of the year. There's some very interesting things that are potentially happening with the financials. Like they flushed out the inventory. They had record deliveries, but not record production, which meant they wanted to get rid of all the Model Ys before Juniper came out. So there could be a little tailwind there on the profits, margins, all that type of stuff. Also, Megapack, that could be very interesting. I found it very profound yesterday as well. They show the self-driving cars in the factory. That was kind of like a mini Sputnik moment for me. It was just something to behold. And I can't remember who it was. Somebody wrote a very funny tweet that Barry Glack will now say all car companies will do this next week.
Right.
But I'm most interested in margins, which normally are not, FSD licensing uptake. If they mention anything around the new affordable model, any OEM license deals, and of course, bot, give us all you can without sharing too much. Did I say Model 2 already? And FSD unsupervised. I mean, as Brian said, there's so much goodness. I've never seen a story like this in 35 years of looking at stocks in a professional working life. So it is very crazy. Nothing but tailwinds and nothing but goodness. The question is, when will it hit? When will the world wake up to all of this goodness? Will it be midway through 2025 or late 2025 or 2026? That's what I cannot answer right now. So I'm stacking as I can every day with every available dollar.
Thank you so much for that, James. Great overview. So I think most of us agree that it's not as important in terms of production or in terms of cars and the gross margins and so forth. But let's take a look at that anyways, because it's going to be one of the first things that they will report. You've got here. This is what they showed, what they actually accomplished, right? So just to remind everybody, at the end of 2024. Tesla's delivered 1.789 million cars, and this is the breakdown in the models here. And in terms of the estimates for earnings per share, thank you, Paige, for collecting everything. You've got a huge range here. You've got the analyst consensus at 70 cents. You got James, another fantastic account to follow. He's at 98 cents of earnings per share non-GAAP. And then you got folks all the way down to 72 cents. So, Larry, you are right on track with the analyst consensus. How did you calculate that?
I generally I don't do the kind of level of detail that Troy or even AJ does. I take what I believe to be the relative midpoints in the different line items. I do some, I guess, estimation at each line item based upon, gut feel, based upon how the quarters run. And so, for me, I don't go much deeper than revenues at the main product line levels, and the same for cost of revenues and gross profits. My operating expenses tend to be quite accurate and run along pretty close to what they're getting, what they actually end up getting. I will say that I'm a little bit light. I'm a little bit low on automotive, but it's offset somewhat by my expectation to see increased margins and gross profit on energy. I think energy is going to be an upside surprise, and then I just come up with that gets me to my number. So not the level of detail that some of the analysts will do, some of the financial analysts will do, but the level of detail that gets me, within a striking distance for the most part.
Yeah.
And
Okay.
I don't think it's going to make a lot of difference. Anything between 75 and 79, I don't think will have a big impact on the stock, because the stock is not an earnings story. It is really what the future products are coming down the pike, as Simon has said. So so I don't know.
James aside. Mm-hmm.
I don't think there's going to be a lot of drama around this. My expectation is that it all depends upon which Elon turns up today.
Exactly.
I think if we see an excited and excitable Elon, and he's present, and he doesn't get real mad with the analysts, I think we're going to have a very good call with a very good impact on the stock price. If he's truculent, if he gets a little bit, tough with the questioners, if he gets short with his own people, I think we may see, the stock decline a little bit more. I think stocks want to go a little bit lower right now. People aren't. I think we're in a kind of waiting period to see how this administration beds in and what their policies are going to be. So I think stocks are under some pressure at the moment.
I think, first of all, 76 cents is my baseline. We'll go higher than that. But I think the elephant in the room is worth discussing. Tesla got hit because of all the DeepSeek kerfuffle. Is AI dead? Are they able to spin up their own FSD in a matter of no time? And of course they're not. But I think that's what's keeping the lid on prices right now, not just earnings. But guidance will drive everything. Mr. Lutz is here.
Yeah, Mr. Lutz is here. Before we get to Simon and Jeff, just to round it up, I just want to share the analyst expectations. So we just covered what their expectations are for earnings per share. Actually, they put 75 cents. I thought it was 77 cents. But anyways, revenue of 27 billion for the fourth quarter. You've got operating income 2.6 billion, free cash flow 1.75, gross margin 18.9%, capital expenditure of 2.72 billion. Jeff, what do you think about the gross margin? I know we've all said that it's not as important this quarter, but anyways, what's your estimate of these numbers?
I think if you put the whole earnings call into context, I kind of rank the Q4 numbers as third, maybe even fourth in priority. And I'll answer your question directly, but I agree with Larry. The Elon tone is number one. And it should be positive given everything that's transpired from the last call for him and for the company.
Yeah.
I think the second most important thing is going to be the guide and what they talk about in terms of new vehicle launches. They've already executed well on the Model Y, but how are the lower cost vehicles coming? Any major movements in either those vehicles or the Cybercab, at least starting, production by the end of the year. I think it'll be important. And then anything they talk about in the 20 to 30% growth of vehicle deliveries. I think that commentary is probably second to Elon's tone. The third or fourth thing, it could be the Q4 numbers. And so in terms of revenue, earnings, gross margins, I do think they have a shot on gross margins to be higher than that. But there's a lot of things that kind of go in either direction. I've often told people on your show and other discussions that inside of a company like this, it's very difficult to predict like what can go either way. In general, Tesla has a very strong COGS and gross margin program and culture in the company. You can tell some companies are absolutely broken, and whatever happens, whatever way the wind blows, whatever happens with currency just kills them. Tesla has a culture that will continuously drive COGS lower. And then when we get to the AI discussion, it takes it to a whole new level. I think the fourth thing that could come up on the call is anything relating to taxes, tariffs, and EV credits. That could also weigh heavily in the conversation. GM decided to guide without including that impacts from that. I think that they got a little bit of a pressure for that. So I think that's the fourth thing. So Elon tone, the guide, the Q4 numbers, and the credits. They beat last quarter. I think that really helped in Q3. They beat EPS by like 20% versus the street consensus. That's what I remember. And they beat gross margins by 150 or almost 200 basis points. So it was a big beat on both those elements. I think that presented a backstop for the stock. After the We Robot event, kind of a sell-off, and then very strong fundamentals there. So we'll see. I still think they have a chance to do extremely well, and there's nothing to me that would say like, oh, these things, because a lot of the spiffs and programs they put on weren't necessarily in quarter impacts. Some of them were, some of them weren't, and so we'll have to see. It doesn't look like they did a big expedite. The other thing to me, it looks like they made a decision. This is very important. In probably the early part or middle part of December to solve for stock and channel and ramp down the Model Y for the global introduction of the new one in January. And when you make a decision like that to get rid of that inventory, your expedite loop changes dramatically. So now it just goes from your outbound distribution to the customer versus if you're trying to make a bigger number, if like we're going for the 515 no matter what. That means you're putting expedites on at the supplier level, their supplier level, suppliers to the tier 2, tier 3. You're expediting that entire chain. You're writing checks for that. You're paying for that, and those expedites become very expensive. So this whole thing about Tesla reducing that delivery wave, they actually did it in this quarter, and so I think that may actually have a very favorable impact. So we'll see. I think it's very difficult to predict.
Great point, right? Because that's now we know why they had lowered Q4 sales is because they were preparing for the transition to the new Model Y, which came out pretty well immediately here in January. You were pointing that out as well.
By the way, that's like $1.4 billion in cash, I think, roughly. That's a big number to take that working capital out. So they may have they could have a big free cash flow beat. We'll see.
Okay, so we have 3 people so far who say, or including James, Larry, and you, who are saying that Elon, how he comes out is going to be the most important thing you're watching out for. Just to remind everybody, in 15 minutes here, we're going to show the actual drop when they share the shareholder deck that will appear here. We'll download it. We'll walk you through every single page here. So we've got Simon Hill here with us. Simon is our representative for the Wall Street. He is a portfolio manager, Wellington Altus, and he keeps a close eye on, well, he is one of the people that are on the institutional side. Tell us what you're thinking, that they're thinking, and what they're expecting. You're on mute.
Up in Canada, we call it Bay Street, but Wall Street's good enough.
Yeah.
Look, I think that one, in terms of the stock direction, it's really gone nowhere over the last month. And I don't even think it was affected by this recent AI scare, considering like how everything else moved. I think that people are sort of on the sidelines, big institutions waiting for this earnings before they put on a position. But my sort of feeling is that the stock has already sold off quite a bit. It hasn't run up into earnings. It actually sort of went down and then sideways. So I think all that's needed is not a horrible call and not a big miss for the stock actually to do okay. And I think it's underwater, under pressure, and I think it's just looking for an excuse to go higher from this point. Some of the things that, and it's funny because I've stopped trying to make models of what I think they're going to do. I'll look at everybody else has really great models on X, because I've been so wrong on making calls short term, because there's so many moving parts within their numbers. But when I do have a model, we have an internal model, and we're looking at 5 and 10 years out, and that's where it gets really, really exciting. So for me, I don't care what their margins come in at. I think they're going to be good. I think they're going to surprise again. I am interested in to see the direction of their energy and to see where those margins are, because that's really starting to ramp up. Maybe hear something about the factory in China and how that's starting to ramp, because that can have a material impact this year and next. But realistically, I mean, a stock trading at, I don't know, 100 and what times earnings, it's not trading at this multiple or this valuation on their margins. It's all about FSD, and it's all about, I don't even know if I've priced in robotics yet. I know all of us have. Things that can move the stock, a big surprise would be talking about those growth numbers. That's what Wall Street wants. So what does Wall Street want? They want to hear, we're gonna achieve 30% growth this year, or 40%, and we're back to growth, and we're gonna do that next year and next year. They want to put something in their spreadsheet, and Elon, if he feels like pulling something out of his hat, is going to deliver what they need to hear, because they really need to be spoon-fed. And these simple numbers, like, do we care if they're 18% margin or 20% margin? Not really. What really matters is how is the FSD program progressing, licensing, that sort of thing. So I'm not overly concerned. I don't really care where the earnings go, but it's always exciting, and especially when I deal with money with clients, when the stock goes up, clients always feel better. So that's what we're hoping for.
Yeah, there's two pieces of breaking news just popped in too. One, Elon just got nominated for the Nobel Peace Prize.
Yep.
You guys probably heard about it. And second, Elon has been doing a lot of work with the government and Doge, and he's on his own now. He's no longer with Vivek, but he has been exploring blockchain technology to track government spending. So I think, the question was what Elon will turn up today. I think a very tired one that's very distracted, unfortunately. I hope I'm wrong.
Well, I was going to bring that up because what kind of Elon are we expecting? Well,
He's
last
not going to
night
be tired.
I don't think so either.
I mean, he gets
Energized.
electric when he gets busy. Electric.
He's been posting all night, all day today, and not only him, his cadre of Tesla executives, and they've been all very positive, very so forth. They dropped this video, of course, this last night. They showed that Tesla cars coming out of factories in Fremont are all being driverless now. It comes out of the factory, goes right to the docking plant, the parking lot by itself. Why did they do that? I mean, it sounds like they're very, very optimistic, right? This is just positive news all night, all morning from multiple Tesla executives.
That was mind-blowing to me. Jeff?
Yeah,
I think
who
it can be
thinks Tesla,
taken.
he'll be good mood. Yeah.
Oh, I mean, to answer your question, I think it could be taken either way. Some people could say, they're putting these videos out because, there's not so good news coming. So I think it can be taken either way. In general, the reason you're long-term invested in this business is because of what's in that video and not what happens on the 90-day hamster wheel. I just wanted to point out that there's been a 20, maybe you said it before I joined, but we're 20% off from the peak where the stock was in the quarter coming into earnings. I typically like to come in at that level versus coming in at 480. in terms of, what would happen post earnings. Obviously, I'd love the stock to be $100 higher right now, but in general, when you're talking about sentiment coming into earnings, that's one data point. It looks like there's 9.5% volatility, and either way, the options volatility. So it's kind of a big number in terms of what what stock move that we could expect. And then the other thing is Meta and Microsoft are all reporting after hours, and those weigh heavily on the NASDAQ as well. So you have a lot of activity. You have the Fed earlier today as well. Like there's just a lot of things happening in this sphere right now. So it's not just Tesla's show here after hours.
Exciting times.
Yeah, take a look
Sometimes a little too exciting, but we're here for the ride.
Yeah, here's the stock, right? This is what happened today. It started at 395, fell to 387, $10 drop. In the last 5 days, it's actually been falling significantly, continuously. And the last month, it's kind of back, went up and went down again. So where we're at.
Yeah, I'd like to ask Larry and Jeff on this one. I believe the DeepSeek news put a lot of pressure on AI so-called stocks. How much of that is driven by DeepSeek? I think all of it. Your thoughts?
Yeah, I think it's a bubble bursting moment on AI. I think AI got pretty far ahead of itself. Anything AI got itself 100% markup. It's kind of crazy. And I think it's not like a, year 2000 bust, but it's definitely a minor bubble burst as far as AI is concerned. I think it's a very, very good sort of check on the market at this point. I think everything gets more realistically priced. I think that it's a good opportunity to take a deep breath. But there are a lot of news items that Tesla could potentially put on the table in the call today, a lot. And some of them are very, very powerful. I mean, he could talk about where they are in production of the Cybercab. I'm getting stories about potential production advances in the Cybercab that sound very exciting. He could talk about the lower cost car and where they are in that. So if they give indications that they are really moving ahead on the 2025 program that he presented in the last quarterly call, that will be quite a important moment. But I'd be interested to see what Jeff has to say about, the bust and on the AI stocks.
Yeah, I've talked fairly extensively, both online and some of the shows Herbert and I have done. It has definitely had an impact. There's nothing quantifiable to say though in terms of like where this goes. To me, this thing spun up on a late Friday over the weekend. It spun up, it got viral, went out of control, and you have just so many interesting positions, whether it's the CEOs of these mega cap companies, it's the CEO of NVIDIA, and you just have everybody's in kind of an interesting position because they're always battling on price and supply and allocation. And it's just if you've been in the side of the business where you have to procure and build these products, these types of disruptions can cause a lot of issues, and you'll get the kind of responses out of these CEOs that it doesn't seem linear, like what some of the responses, some of the non-responses I find interesting too. So I think what everybody's looking for is on the calls starting tonight, that there's a reaffirmation of their CapEx guidance. I think if you dig deeper, if you piece apart everything that happened with this DeepSeek kind of drama, there are some things that point to some algorithmic improvements occurring as an output, but that should be an open source and that should be available for everyone else and everybody can enjoy it. There are documented like the whole headline, the whole thing I think that started this was the cost picture. I think that's been mostly completely obliterated, but of course, it's kind of like, the crime scene already happened. Now you have people coming in and trying to clean it up later. It just doesn't have the same amount of fanfare, but it just seems like that whole cost piece of it has been completely obliterated. Their own research papers, showed what they've procured, what they've done. So I think where it leaves us is there's still question in the marketplace, because you have narratives that get out and they just viral, they get out of control. So I still think you do have some amount of instability right now in the marketplace. I think the hyperscalers need to set the record straight about where they see training going and where they see inference going and where they see their demand. And remember, the other thing you have to set straight is like LLMs are not the end point. This is just like a beginning point in one portion of AI. It's AGI, it's ASI, it's physical real world AI. And I believe that's where Tesla and Elon take the commentary after the call.
Okay.
And I think they have a real opportunity to grab that narrative and say, like, you see these cars driving themselves out of the factory. That is not something that is cut and paste, from one vendor to another, like you can with a large language model. And finally, just the whole thing from a government perspective, like the response of the government, the export restrictions. I mean, this thing can be a whole show within itself. Export restrictions don't work. If you've been inside of the industry, they're not effective. They are more effective on the larger pieces of equipment, like the restrictions they put on the lithography equipment, and those work. But you're talking about chips; these things can be, in the small computers, these things can be moved fairly easily. And the other thing is they didn't put the export restrictions on the models themselves. The open AIs of the world, they could have protected their models in a way a little bit more, but instead they've allowed themselves to be in this distillation scheme where they could basically be copied, leveraged, and catapulted forward. So yeah, it's left us in a precarious place. But I think as it retains to Tesla is going for real world AGI and going for super intelligence with XAI. That's the end point. We do not have enough training. We do not have enough pre-training, training, or inference silicon in the world right now that gets us there. And I think these hyperscalers just need to clarify what end state looks like. This is not end state.
So what I'm seeing this week, this is not just a wake-up call about China. This is a wake-up call to every AI company that you can be leapfrogged. You can be, all of you anyone can be the next one to leapfrog you with a very small, lean algorithm. The three things that matter are the hardware, the software, and the training data. And one thing we were talking about a little bit ago, Herbert and I on a previous show, was that just with the cars delivering themselves from the end of line to the delivery staging area is going to be millions of miles of training data per year that nobody else has. It is a huge advantage because Tesla had the foresight to deploy millions of cameras and sensors and corresponding all the hardware needed to get this advantage. So even if someone, like I've been saying for a while, if someone cracks the code today, tomorrow some company says we've got level 5, it is 100% solved, it's going to take them 3-4 years to get that on the road and start scaling. Where if Tesla then cracks it any time before then, they have the tremendous advantage of having all these vehicles out there ready to go.
Well, I have to say, as far as FSD is concerned, I just drove up from Florida. Sorry, the car drove me up from Florida yesterday to North Carolina. And the entire trip was done with no intervention whatsoever, period. Now, I set out not to do kind of, interventions for convenience, which I normally do because I wanted to see it go point to point to point to point. I didn't take the Cybertruck, I took my Model 3, but it was absolutely flawless. There were a few hairy moments on the freeway where lanes disappeared on us, but the car handled it, and it handled some very, very complex situations extremely well. So I don't know how far we are away. I don't think we're very far away. Anyway, I don't want to get, the discussion sidetracked, but man, I tell you, it's something else.
We'll find out short enough. So it's 1 o'clock. we are waiting for them to post the shareholder deck. Can you guys? There is actually another link to get the shareholder deck as fast as possible. Do you guys remember where that is?
It's Tesla IR on their home.
That's where I am, but there's actually another place that Xander pointed me out to last time that got it sooner.
Maybe.
But you guys keep your eye out for it. Well, as soon as we get the shareholder deck drop, we will open it up, and we'll.
I'll keep hitting refresh on the press releases page in case that.
There's another place. Can't remember what it was.
Yeah, I think it's is it Say Technologies or something? The people that they host the questions on and things like that.
You think so? Can you see if you can go there?
I'm trying to find it.
Meantime,
I think the
Microsoft
comments will
reported.
also
Yeah,
light up on us.
Bloomberg terminal's correct. Somebody said, but yeah, maybe Simon. Can you?
Yeah, I'm watching CNBC. They're working on Microsoft earnings right now, but and I'm looking for Tesla on my fact set, and they haven't dropped anything yet.
Someone said it's live in the chat. We'll see.
I'll check.
Well,
Or if in doubt, just go to Sawyer Merritt's feed. That's what I do.
actually, that's not a bad idea. Sawyer is a tremendous asset to the
He's
community.
on it like white on rice.
And if you're not following everyone who's in this show, consider doing so. There's a lot of variety in coverage, in expertise, and some fun to be had.
Yeah, what's happening to the stock? People are saying it's tanking.
Whoa, that's a sign. It's
Down $10.
It's down $2 after hours.
$10.
After hours?
$2
Yeah.
after hours. Actually, only
No.
$1.40 after hours.
No, it's 376.
Yeah, closed at 388.
Yeah, it's down 10.
Now it's going up
Okay.
again.
There it is. Thank
So
you.
it's
There you
right.
go. Thank you, Obi.
Whoa, down again. It's
How
all
do I
over the
get
place.
this? Can't find that link though. The Obi sent the link, but I can't copy and paste it. Can't copy and paste that link.
No, you can't.
Well, it's down. Now it's falling hard. $12 after hours.
Something's released. Yeah, it basically down.
I'm seeing it. I was able to copy it from the sidebar there and paste it just fine.
Okay. Can you send me the link then onto the private chat?
Yep.
Test results are out.
I think
There
I got
it
it.
is.
I just got it.
Okay. Here we go, ladies and gentlemen.
Download. Deck is in. The website has crashed. The link cannot be found. All right.
7.1 billion gap operating, 8.4 billion non-gap operating cash flow of 14.9 billion.
That's for the
4.8 of it in for the year, and 4.8 in Q4.
Yeah, that's the problem. The 68 cents.
68 pennies.
76 cents. And the gain on Bitcoin is in there too.
Ooh, that's not good.
Yeah. So net it's
So, yeah, that's a big miss.
Operating margins.
What a buying opportunity for savvy investors. I'm a buy and hold kind of guy. I am not capable of dedicating the headspace necessary to understand short-term movements
I
in
think
something
James
as
Cat
chaotic.
wins again.
What is it? What did he do?
He was down at 67, 60, maybe. He was pretty low. I think he was the lowest.
Okay. Sorry. I'm almost ready here.
Auto revenue down 5 billion for over 2023. Energy up 67% year over year.
What was the energy quarter's revenue?
10 for the quarter. Oh, I'm looking at the year. I'm not
3 billion.
seeing
What?
energy.
Yeah, energy generation and storage revenue 3 billion.
That's a big.
So they don't
disappointment.
give a guidance on the growth, guys. It says here that with advancements in vehicle autonomy and introduction of new products, we expect the vehicle business to return to growth in 2025. The rate of growth will depend on a variety of factors, but they don't give a percentage.
Wow.
No talk of Model 2 either, huh?
Plans for new vehicles, including more affordable vehicles, remain on track for start of production first half of 2025. That's fantastic news. That's still on track. But then they say the same line as it did last time. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 60% growth over 2024 production. So capacity is that, but they don't give a guidance. Cost of goods fell some more. All-time low, Q4. As
Nice
you
and
predicted,
dramatic
Jeff.
one there. Yeah.
Fantastic. Wow,
Wow.
this is a nice list. Okay.
This is Cybertruck.
I was looking for, do they not give they don't give us a picture of the compute? I want to look at the compute.
They did get a picture. There was you just whipped past it. You mean a graph of the compute capacity?
Yes. Yeah.
Uh,
Compute. So do we see anything new here? We're close to 3 billion miles. Are there in Q4 we completed about 50,000 H100s?
yeah.
Ahead of planned pilot production in 2025. Yep. So, but they don't give actual numbers. Maybe he'll give more color.
What did he say is ahead of plan?
Progress of Optimus.
Oh, ahead of planned pilot production in 2025.
I mean, they made progress on the hardware and software. Yeah. So it means
The stock dipped all the way down to 365 and now it's rebounding to 375. That was a vicious dip. Well done to the snipers out there that got some at 365.
million miles. Tesla vehicles using autopilot technology. Whenever they do this, they don't break it down whether this is highway or highway or not. That's the same. Energy generation. Big jump. Larry, why aren't you happy with energy?
The revenue dollar. The
Tesla
dollar
says.
Mhm.
Oh, sorry. They increased training compute by 400% in
Where's
2024. Sawyer just messaged it.
Mm-hmm.
And there's a new energy deployment record, 11 gigawatt hours in Q4. That's 244% over last year. The total revenue for the whole business, Q4, beat last year by 2%. Not bad. Average cost per vehicle, all-time low of less than 35,000. Is that right?
So yeah.
And that includes the Model Y, which is the most common vehicle, of course, and it includes all the other vehicles of which they sell far fewer. So this is still a pretty fantastic cost of goods sold.
Did anybody see gross auto margins?
Yeah, there's total GAAP gross margins. It says 16.3%. And then it says total EBITDA margins, 19.1.
That's a beat.
Adjusted EBITDA 19.1, which would be higher than the 18.5 from the last quarter, but the GAAP gross margins of 19, it was 19.8 the prior quarter, now it's 16.3. So it's kind of the adjusted EBITDA versus total GAAP switcheroo.
Cybertruck capacity is 125,000 units run rate right now. which is halfway to target 250K. But it also mentions Cybercab production not starting till 2026. So for those who believe there's a Gigafactory parking lot full of them, I don't think so.
Where does it say that?
Down in the report page. Hang on a second. Let me try. Scroll through it and I remember it. Cybercab. Yeah, page, what is it? I can't read the page number. I think it's page 9. Preparation is underway for Cybercab lines at Gigafactory, Texas, with volume production planned for 2026. Volume production, not production.
Yeah, it's volume. Yeah, that's not startup production.
Yeah, so
that's consistent.
Good.
Where's that?
That's what he said in the last quarter, yeah.
Yeah. Services, well, energy storage continues to be strong. I was afraid there'd be choppiness in the numbers, but it continues to be very strong. And Cybercab will be unboxed.
Mm-hmm. And it's going to be started. So nothing has changed in terms of the new vehicles. That's one of the big things we're looking for.
Yes.
I mean, for them not to give a guidance on terms of volume, I don't think it's a big deal. Everything else looks pretty good.
I think the only it too.
Sorry.
They usually like that when Elon said 20 to 30%. I don't think that was explicitly in the deck. It was what he said on the call.
That's right.
So
that's right.
He made mention on the call.
50,000 GPU training cluster. I thought we had thought it was 100,000.
No, that's the second phase. I think the first phase was 50.
Okay. Free cash flow was less. Operating cash flow was less. But I don't know why I don't know why people would be freaking out about that. I think generally it looks good, right? Where are you guys standing at this point?
This whole comment at the sorry, Larry, I was going to say this comment at the end of page 12, they continue to reiterate, with the newer vehicles that, it said should help us to fully utilize our current expected maximum capacity, fully utilize. So that term to me means like we're planning this production where it's not like we're just installing machines and twiddling our thumbs. Current expected maximum capacity of close to 3 million vehicles, enabling more than 60% growth over 2024 before investing in the new lines for truck and they don't say this, but for truck and for Cybercab. Interesting. Why leave that in? Like if you think, like, to me, like, why would you leave that statement in if you're not bullish on your volumes? Not saying that they're correct, but in general, Tesla does not have a history of installing, loads and loads of capacity and then leaving it idle. They just don't do that.
I can tell you where I missed quite badly was on energy. I had energy at significantly higher. Their energy revenue was not much higher. It was approximately the same as the Q2, which was a big disappointment because there's significantly more gigawatt hours in Q4 than Q2. That was a big miss that I had. My order came in almost exactly to the penny. But on energy generation storage, they have 3,061 million. I had 3,650 million. I wonder if my margins are also too high.
Yeah, but it also look at the gigawatt of storage deployment. That means that in the future, that's going to show up.
It should have showed up with the billing of the revenue this quarter. So their margins have slipped on energy. That's what I'm seeing. I think that's the Let me look at the.
We are still seeing 692 million for regulatory credits.
Yeah, that's what made up the. That's what really made up the auto. So I'm right there on the auto, absolutely on the nose. My regulatory credits were lower than theirs, but then my auto revenue was higher. But the margins on the regulatory credits are 100%, so that really made up for it. But it's definitely in the energy, and let's see what services 22.7.
Cash went up 36.6 billion. It went up by 2.9 billion.
Yeah, I expected that. Did they sell any of their? No, they didn't. They've still got all of their
operating income decreased, but because they increased spend on AI and other R&D.
That wouldn't affect operating
operating income. That's what it says right here.
Operating income would reduce, yes,
Yeah.
not margin.
Yeah.
Let me see. Yeah. Total revenue, cost of revenue, operating expenses. Well, wow. Put it mildly. No.
Best cost of goods, lowest ever, less than 35,000. That's
what I said earlier, and I've been saying for a month or so since they reported P&D. Look at the free cash flow, the 3.6 billion versus the 2.08 or in just the I mean, they took so much working capital out of the system. That's a big number.
Look at this. This is the most important part, I think. Which we expect. This is FSD, unsupervised FSD. We expect to begin launching later this year in parts of the U.S. So it's still on track. We also continue to work on launching FSD supervised in Europe and China in 2025. Still on track.
Yeah.
So
the vehicles and unsupervised have been reiterated, and that would be a shock based on the rhetoric on X and of the leadership team and Elon. It would be a shock if they said everything they're saying and then they come in and said, "Oh, by the way, we're bumping it out." I think this thing there'd be a huge problem. But the fact that these are the most important things driving the multiple, quite frankly.
Yeah, I think overall for me this is very good. Where are you guys standing on this?
Cautiously, I'm a long-termer, so all of this is fine. It doesn't bother me a bit.
Yeah, I'm not bothered by the EPS so much as the 2 billion lower. And I mean, I guess they'll explain away the 2 billion miss in revenues. I just trying to understand that, because I mean, when these estimates came in, everybody knew what we delivered in terms of vehicles. So why was the street up at 27.2 and we came in at 25.7? Like, where's the miss on revenue? I think that that just needs to be answered.
Average price per vehicle.
ASPs went down, and that's because of the incentives. Yeah.
So it's average price per vehicle, and revenue was about 470, maybe 500 million less than expected. That's quite a big number, actually, right there. What is the margin, actually? The margin's like right down at 680 on, well, it's 20%, 23%. It's a little low.
Preparation is underway for Cybercab lines in Giga, Texas, with volume production planned for 2026. Perfect.
Not a word about the lower price car.
They did say that the more affordable vehicles, like up here, including more affordable vehicles,
on track for first half 25.
Mm-hmm. Preparations are underway across our existing factories, multiple, for the launch of new products, including more affordable models. It's great.
particularly if they're able to launch in all 3 factories at the same time, all 4 factories at the same time, as they did the Model Y.
Here, look at this. In Q4, Tesla vehicles using autopilot drove 5.94 million miles between accidents, the best Q4 ever compared to the US average of 0.7 million miles. Yeah, still, it's improving. That ramp up is still going up steep right here. That's a good news. That's not even V12 and beyond. There you go.
So what are you guys hoping to hear on the call, I guess would be my question.
When unsupervised, any bot updates, any OEM license deal updates, any Model 2.5 updates, Cybercab updates, the usual suspects. That hasn't changed at all.
Yeah. My question was promoted on the bot and design lock. So it'll be interesting how they respond to that. And that this, I mean, I think we shouldn't take this. I'm going to find this statement again in the deck that regarding bot production. I got to find it, but that you said the pull in the pilot. That's kind of a big deal.
Sorry, what page is that on? I
gotta
not
find
remember.
it. Herbert. Yeah, I gotta. You
on
actually
this
found it
existing deck?
earlier.
Yeah, they're talking about the
Yeah.
bot. Yeah. I mean, here it is. It says progress on Optimus hardware and software continued in Q4, including the latest generation hand, robust locomotion and training on additional tasks, ahead of planned pilot production in 2025. So they're just saying pilot production until 25.
But that's the start of like you come out of pilot and you go into production, and the phase before pilot, the phase before pilot, they could build 5,000 bots in the phase before pilot. So that's a big deal. That is from the last call. I'd be interested to look at this this paragraph from the last call to this call. Obviously, Elon hinted at this at his CES one-on-one interview he did, over video with that gentleman. I would be interested to go look at this paragraph from the prior earnings deck. That's kind of a big deal.
After hours just went positive, by the way.
So
this
congrats
means
again to those who got the 365.
Yeah.
That to me indicates that the improvement we're seeing on unsupervised, or their bullishness on unsupervised, is and then their separate work on bot hardware are converging, and they're saying that they're going to be ahead on this. Now, something could happen later on in the year, who knows? But what Elon said in that CES interview is they are now putting it in their earnings print. And I just want to reiterate, in that pilot production process, they could build thousands. Even in the phase before, they could build thousands that go into the Tesla factory. So,
sorry, Jeff, can you walk us through what a pilot production?
Sure.
Yeah.
So if you were to go all the way to the end of the process and say, when is the bot, going into production? There's a thing called SOP, or start of production. And that's the low volume production. So for the Cybercab, if they're on track, that should be the end of 2025. And then after start of production, you have volume production. So start of production is, smaller, but many, many thousands of units. And you're basically ramping the lines up. And then full on volume production is when you get the peak velocity. So those are the kind of the two final phases. Like we're in start of production, for the Model Y right now for North America, for example. And then I'm sure they're going to volume production later this quarter, hopefully, to put it in perspective. This thing on the bot indicates that so before start of production is pilot production, to answer your question. So pilot production, start of production, and then full volume production. So now, what I said when you did that video a couple weeks ago in the CES video, I said that when Elon said we're building 5 to 10,000 bots this year, to me that said that they would be entering into pilot production by the end of this year, and which would trigger a start of production potentially by the end of the year if pilot goes well. If not, maybe they have to do some fixes. But the point is like they could do real thousands of bots in production. Like if this plan holds, there could be a visual here by the end of the year of thousands of bots working in a Tesla factory. And if you thought the visual of cars driving themselves out of the factory was kind of wow, wait till you see. Right now, we only see one of these things at a time. When we were at We Robot, we saw a bunch of them marching out. But all of a sudden, when you start seeing dozens and dozens of these things doing work, I think that visual is going to be a bit mind-bending.
Yeah. 404, 405. The market's digesting the news, and they see the goodness, which is very rare.
Market's stupid.
I think it happened last quarter as well. I think we saw a real recovery very soon.
So I don't know. It's difficult to get like any kind of meaningful volume in after hours.
Yeah.
But like I've learned from, meeting with the guys down in BlackRock and Goldman, like they're running AI models, basically quants, that are just sorting through this. So as soon as it gets printed, they basically sort through it, and they'll have trading algorithms that will basically just trade. So the majority of this trading, and during office hours, market hours, is mainly algorithms just trading this stuff. It's once in a while when you get a really, really big move that you'll have like institutionals trying to build a position. So it's interesting when you see the market move really quickly, you have to understand it's just digesting, and it's their algorithms or their AI that's reading what's the tone of this. And you're going to watch during the earnings call, if you're watching the aftermarket, and you'll see the stock go like this and like this. It actually takes into consideration the tone of the CEO that's speaking, how many times they mention a specific word this call versus another call, and they're looking for key things. So they're using AI to basically, and then they'll trade upon that in the after hours, in the middle of the earnings call, and that's what's driving this stock up and down.
Sorry, James, can you confirm? Because when I'm looking at it, after hours, the stock's at $402, a $13 rise.
Yep.
Yeah, $15 rise now.
Actually,
Closed at 388.
Yeah,
but I'm looking at TradingView and Robinhood, and
I'm on FactSet and Bloomberg, and it's the 403.
Yeah, it went from 366 to 403 in a matter of 5 minutes. Somebody turned a few dollars there.
I think everything was reiterated as far as a shareholder deck.
I think
they must have been listening. They must have been listening to our call, Herbert.
Yeah, they were listening to us.
Definitely. Was there anything that I'm missing here that they did not reiterate that we were expecting? The 20-30% growth, but like Jeff was saying, their capacity is still high. All the products are still being built. Model Y is at the high, so and like Jeff said that maybe he said the 20-30% at the call, not written on the shareholder deck. So this is perfectly fine. I was wrong to point it out. Said, hey, how come they didn't say it?
Yeah.
Gross margins lower, right? Is that cost of goods? I mean, Jeff, that's massive.
Yeah, I mean the expectation is they should continue driving gross margins lower. So that's great to see.
Cost of goods. Yeah.
Yeah. Sorry. Cost of goods lower.
Yeah. That sub $35,000 number I thought was very impressive.
That includes Cybertruck. I think people need to understand that includes a Cybertruck.
The technology in that thing, the bulletproof material, the four-wheel steering.
Talking about the Cybertruck, did you guys see this table?
Yep.
My God, these are all the technologies in the Cybertruck that they're going to use in future vehicles.
That's interesting. Why do you think, Jeff, that they're not going to use the stainless steel exoskeleton in future vehicles? Just too costly?
It's overkill.
It's not a real exoskeleton. It's a redundant structure. It didn't live up to that aspect of the intention, and as a result, it just didn't work. So with the Cybercab, what they're doing is more of a more of just a shell, more of just a more traditional kind of design that'll be lower cost
Well,
and less
not
redundant.
It's
not
used
that
in all future vehicles.
not that traditional. I think they're using a composite for the body.
The engineers didn't know
render.
what the final surface was going to be as of December 5th when I talked to them. They just knew it wasn't going to be stainless.
Well,
So there's a lot of flexibility there.
Yeah, my most recent update is that they're actually building it out of composite.
Today they may be, but for the final production, last I heard, the engineers were still up in the air.
I think this is massive news. Use in future vehicles, 48 volt, the steer by wire, right? Giga casting, all these things. Great.
Yeah.
Ether.
We actually Alexandra just joined us, but we had a conversation about this, I think in August or September, that these were the ingredients for the Cybercab. You know, steer by wire, 48 volt, all that stuff. So
Alexandra, have you had a chance to digest what you saw there?
Yeah, I mean, I didn't read it all yet, but Herbert, we were waiting for such a long time to see where this money was going. Remember when you and me were talking about how many billions they're going to throw at GPUs? Remember that?
Yeah.
Well, there they are. So, I mean, it has to be at one point spent and expensed, right? So that is obviously the tough one. And I think that's why the market initially went down. But once you account for that, once you understand what these expenses were all about, and you understand that we now have an average cost of below 35,000 per car, I mean, that is just incredible. What I was surprised, but then again, you know, I've ended wanting to make predictions on energy, was that the margin on energy went down. But the thing with energy is that it's just so unpredictable when they receive the money, the installments, the way this is situated. I don't think anybody from us can have a fair shake on understanding, you know, how much energy margin there will be. And other than Q3, which was so much above it, we're just now in that normal trajectory of rising energy margins again. So, I mean, it is what it is. It's a bit tougher to understand the whole thing, but I'm not, you know, super bullish on these numbers, but I'm certainly not disappointed. And I think everything that's much more important is fully on track. I mean, they're still talking about the new release in the first half of this year. They're still talking about full self-drive being permitted in Texas and California this year. So all these things are still in place, and they are much more important than anything else. And I was just listening in before I jumped on Jeff explaining the bot launch. I mean, for me, this sounds all confirming what we'd hoped for. So I don't see anything negative here.
Beautiful summary.
So
Beautiful.
I'm looking at last quarter's deck under artificial intelligence, software, and hardware, and they don't mention the bot in the last earnings deck. So I go, that's page 8 of last quarter's earning deck, and if I go to page, I guess it's page 10, the same section, artificial intelligence, hardware, software, they insert, this is the new sentence. This is new for this quarter in the print. Progress on Optimus hardware and software continued in Q4, including the latest generation hand, robust locomotion and training on additional tasks ahead of planned pilot production in 2025. So in the last 90 days, they have pulled in the bot.
Yeah, they have. That's the piece that I looked at last quarter and commented on. Yeah.
Which might mean, Jeff, that your question is answered. Is the bot design locked? And, you know, depends on your definition, but it's enough that they're now going to move forward with pilot production.
Yeah.
And that's the difference. And that's why they reported it on the deck, shareholder deck.
Yeah, I was pretty skeptical of that, but it looks like it's real.
So how come no compute chart? That's the one I was hoping to see. Remember how they shared that chart last time and it showed you this is what we're expecting to have by the end of the year? They didn't show that chart today.
See,
Yeah.
going through again in case we missed it.
Because they gave you pictures and they're awesome.
Yeah.
And
Yeah.
the
You see
crayon.
25 and 24?
Well,
Yeah,
worth
yeah.
noting, one of the pictures, something we haven't mentioned, is the mega factory in Shanghai is already showing work on grading adjacent to the primary structure, where the second structure will be
Oh,
going
this
up
one? Which
just
one?
about
Right
immediately.
here? Oh, I
if
thought I
it's-
was showing it.
If it's a sky shot that shows, there it is, right next to it, you can see they're doing grading work where the large second building is expected to be put up, apparently
here.
shortly.
Up here.
Yes,
Yeah.
right there. So that's not, I mean, I guess you could call it phase 2, but it's following immediately on the heels of phase 1. And this is a pretty big facility as it is. Unclear what's going to be going on in that part of the building.
Cybercab
But
production. Cybercab production.
maybe it would certainly fit. You don't need much space to get started, but in China they don't do anything small scale.
But remember that the Cybercab is going to be a box the box construction, and so box assembly. So for that, they're going to need considerably less space. So that could, I mean, it's possible.
Yeah. Can you pop up slide 14, Herbert? I want to ask Jeff a question. Jeff, you know the way they flushed inventory towards Q4? Does that impact slide 14 here? Because I think this is the most profound slide. COGS under 35K. That will put the fear of God into other car makers out there on the planet. Can you pop that up, Herbert, for the audience? Slide 14.
Mm-hmm.
Or page 14, yeah.
Mm-hmm.
Like, this is pretty stunning development.
That's
So
beautiful.
what you want to look at on the COGS reductions is you want to look at the annual reduction. What we would really want to do is we want to look at it on an annualized basis, and we want to look at it net of certain vehicles or certain vehicles segmented, because 2024 was the year of Cybertruck. You know, there are 50, 60,000 Cybertrucks, or maybe 50 or whatever, littered throughout this production. So my guess is that they took Model 3 and Y COGS down significantly, and that's the one I think we want to go and do some analytics and break it out, understand what's model variance, understand what's so forth. But this is good. And then your question about the connection to the 12 days of stock and channel. What happens with companies is if you can really reduce your stock and channel, and you can have Tesla's at another level in terms of, like, they're so low, the 12 days is unbelievable. The next best companies in the world at managing this, like Toyota, are in the, I think, low 30s. We'll see what they officially report. So what that does is that reduces your network latency in the channel. So basically, if you have a cost reduction to introduce, you get it into the factory, you get it through the process, you get it out to customers, you get paid by customers, and then you pay your suppliers. That whole loop is faster. So when they can introduce them faster, and they could reap the benefits of them faster by having the low stock and channel. If you had the high stock and channel, you couldn't recognize all that. So it's a big deal. It's a competitive, the 12 days stock and channel. And remember, a third or half of that is probably in transit. They basically clamped everything down, with Model Y being about 2/3 of their production. They basically clamped everything down. So if Tesla engineering or supply chain have a new whiz-bang part that takes $5 out of what they can introduce it, get it in, and have it hit the bottom line. Other companies, for example, Ford has, I think, over 100 days of inventory of the F-150. That means they have a full quarter plus another, call it half month of inventory that they would have to burn through. So the 12 days is a weapon.
So
it's a weapon for COGS.
Have they achieved what we used to call JIT, just-in-time inventory management, in the 90s? Is this like that on steroids right now, Jeff?
Yeah, I mean, it's not. It's that on steroids, but it's even bigger. This is a cultural philosophy of they've redesigned the network. They've localized more of their production than anybody else, and then they've taken the dealer out of the equation. So they've entered the auto industry, and they've they've disrupted the whole end-to-end cash conversion cycle. So this means, and I was just doing some math earlier this morning. I think GM's around 81 days or so. You want a lower number on cash conversion. Cash conversion is how long before you get paid by your customer buying your car that you have to go and pay your suppliers. I think Tesla maybe like in single digits. Like we have to go through and look at some of these numbers. And GM's up at 80, some days. So it just gives you an idea of their ability to outlay capital to build cars and get paid by their customers. And that's why you see that big free cash flow number is because they almost have a money printing machine with what they're doing right now.
If you look at if you look at Shanghai real quick, I just gotta say it's 9 million square feet. They make 1 million cars a year. That's 9 square feet per car per year. That's insane. If they had to warehouse just the parts for something like that with any kind of buffer, it would be monumental in scale. So that's why they bring everything right up to the loading docks. The trailers are the warehouse. It is a warehouse on wheels, but most of it is right there at the site. And by keeping the time it takes to get paid negative. I mean, most of it's net 30. They're pushing cars out the door in 18 days. What ends up happening is like Jeff was saying, you boost the amount of money you have. You end up with artificially more money, as opposed to BYD, who just hides it on the books and spends 8-9 months not paying the bills so that they can stay afloat.
Okay, great, guys. I think I've got a paragraph here that I think we need to really reread. I think this paragraph might explain some things about what they plan to do for volume production. Tell me if I'm reading this wrong, but look at this first paragraph, okay? It says here, we expect the vehicle business to return to growth in 2025, okay? Then they say this, the rate of growth is going to depend on a variety of factors. It depends on the rate of acceleration of autonomy efforts. Of course, production ramp at our factories and the broader macro environment. But I guess my point is that maybe they're thinking the rate of acceleration of autonomy efforts, if the rate of acceleration of autonomy efforts actually progress, like they're sitting back here, what do I do this year? Maybe they'll ramp up Cybercab if all of a sudden they know for sure autonomy's here. Maybe they'll ramp up other factories, the lower cost vehicles if, it's one thing, right? That they need to, that decides what they're going to do for rate of growth.
There's no point in making cars when you can make cybercabs. It mathematically ROI based makes no sense at all. And I think that's what they're talking about here. If unsupervised is nailed and they get authority to roll out in California, Texas, and a bunch of other states, move all capacity to making cybercabs. And
that's what Elon keeps saying.
Exactly, which explains why they were not pushing it to the last car in the last 2 quarters. They're just, there's no point pushing cars out if you're not making a huge margin on it while you're waiting for the autonomous cars.
Exactly. You can sell a donut for $1 or a donut for $10.
Yeah.
You're going to sell.
What do you mean by autonomous cars? Just Cybercab, or are you hinting there might be just?
But I mean, they say very clearly that in the first half there will be models. There was an S there, right? So, what are the models in your view?
Yeah,
I think it could mean both. I think it could mean exactly what you're describing. It could also mean we're going to sell more 3s and Ys and everything if unsupervised performance, or just if our autonomy performance is amazing, more people are going to buy cars. It goes back to the Elon comment of, it looks like a normal car, but it looks like a normal cat, but my cat can put a top hat on and dance. So I think it's part of that. Just remember, on the Cybercab, they're going to start initial production. And while the cost structure is going to be meaningfully lower, it'll be meaningfully lower once it's at scale. Get that point of getting to scale. It'll start off at low gross margins in the beginning.
Larry, are you okay? Larry, are you okay? You okay?
Yeah.
Okay.
He's thinking AI.
So
you didn't ask me if I'm okay.
Yeah, but this theory though, what happens if FSD unsupervised kicks off? All right, first of all, and they pivot production to cybercabs. Guess what happens next? Model 3s, Model Ys become very precious assets, and the price of those in the secondhand market goes through the roof. Who believes in that theory?
I do.
There you go. Larry, tell
I'm
us more.
stocking up on Model 3s.
Got a garage full. Yeah.
I think okay, so if the autonomy efforts are progressing faster than they realize, then maybe this year they're going to throw even more money to really just going for it and building as many cars as possible.
Well, they have to be a little measured about the introduction of cybercabs in the first year or two. The ramp is going to become very steep in due course, but the ramp at the outset is going to be relatively slow. It's going to be, we're going to be at the bottom of the curve before the curve goes geometric. So, and hyperbolic. I think there'll be a steady introduction at first before it really goes crazy. That's my view anyway.
Okay, so what time is it? 1:50 Pacific time at 2:30, which is 40 minutes from now. They will get on a phone call. We will play that live, stream it here as well. So just stay on board. Should we go through the questions that they might ask?
Yeah, I've got them in a deck actually. If you want, I can pull them up.
Okay. Just want to be sure that I think we really took the most important points already said. I really like the way Alexandra summarized everything perfectly.
I came when it was green. Did you see that? I thought I had no point coming when it's red.
We thought you turned it green with your presence.
There you
I'll accept
go,
it either
Brian.
way.
There you go.
I've got a matching T-shirt on.
You were all in black. I mean, come on. Thank heavens I got Larry.
I mean,
I have a
maybe
green
it's
shirt
my
on.
fault. I don't know.
Oh, there you go.
Oh, man, what have I done?
Come on, James. Where are you, man?
Yeah, I'm waiting for it to upload. It's
Jeez, I'm already ready to go.
Yeah, give me 1 second. And the title is called Agenda, but really it should be the question. So,
And by the way, Jeff, I saw people taking issue with the question about the phrasing design locked on Optimus. Tesla doesn't do design lock. So, right. But come on, we know what you mean. We know what you actually are. Yeah, I mean, of course you have to at some point. You can still modify, but.
Yeah.
Right.
Yeah, they absolutely do that. They announced that process, by the way, on Cybertruck and other vehicles. But yes, of course they iterate, but that they absolutely have to.
So ignore the title, Herbert. Agenda is actually the top questions, at least that I felt were most appropriate. Go for it.
Well, we actually do know already what got voted up to the top.
Exactly.
Okay. So the first one is unsupervised FSD still planned to be released in Texas and California this year? What hurdles still exist to make this happen? That rose to the top.
Yeah, that's a good question.
Then there's
but the next two is different than what you wrote down. My next two that rose up to the top is Optimus now mostly designed locked for 2025? And when will Tesla start selling Optimus in price? Those are the next two highest.
I pulled this first thing this morning, by the way, not as of an hour ago. But I think FSD licensing is very important. Remember that Hyundai rumor way back when?
Mm-hmm.
A few months ago.
That's what Alexandra thought. Hyundai, right?
Yeah, and that makes a lot of perfect sense because they do make good EVs. BYD wouldn't swallow their pride and license it, but I think the Koreans would be open to it first. I'd love to get an update on that because that will change the game. And Alexandra, as you've always said, instead of being a consumer good manufacturer, it becomes a technology company once that hits.
Yes.
That's massive. The other one that I thought was very interesting, and everybody, I've got to buy proxies with things like SpaceX in them to get exposure to SpaceX, but when will shareholders have access to Elon's other ventures, Neuralink, etc.? I think that's an important one.
My question would be to Alexandra, what is the legality of that? Can Tesla shareholders be given preferential treatment in other companies that are not part of Tesla?
Yeah, very good
private
question.
companies, they sure can.
Well, they can get preferential shares, right, Larry?
Yeah, I mean, a private company can be as preference as Elon wishes them to be. They don't have, the SEC doesn't have any sway. So, so for SpaceX, for example, every quarter they allocate stock buyers, or they have to buy stock from employees, and they will allocate that stock out from time to time to private buyers. They'll announce a price. They will not vary the price, but they'll announce a price, and they'll award it at their discretion to whoever the buyer is. Now, they're not going to sell, 100 shares here or 1,000 shares there. They want buyers of 100,000 shares at a time, or 50,000 shares at a time, and so on. So for retail shareholders, they probably need to go through a specified fund. For example, they could do it through the First Principles Group and say, we will allocate X amount to First Principles Group, and they will allocate it to retail Tesla shareholders pari passu with their holding in Tesla. That kind of thing they can do at their absolute discretion.
But if there was an IPO of, say, for example, Starlink,
IPOs, that's an entirely different matter. But they can allocate an IPO pretty much at their discretion.
You mean a pre-IPO for preferential people who have to prove that they have it, and then the final IPO to the public?
That's the question that I've been getting, is from people saying, I want to buy in on the next thing, but before it opens to the market so I can get a better price. And my concern there is, wouldn't that company be required to act in the best interest of existing shareholders, which would be to maximize the sale price?
No, an IPO they can actually allocate freely. I mean, the point is, existing shareholders get their stock listed, and they get to participate in that way. But for if they do list new shares, those new shares are allocated at the discretion of the underwriters. If Tesla get Goldman Sachs or one of the major houses to do the share issue, then that house will probably allocate the stock, not Tesla. But I don't think Tesla will need an underwriter, actually. I mean,
so it was good that this question came up, because that means that they will have to address it, right, Alexandra? They might say it's in discussion with our board. They might say, actually, we're moving forward with some sort of model, and the things you guys are talking about. So at least they'll have to say something about it.
Yeah, and it's actually not Tesla's board who has to.
No,
it is. This is about Tesla shareholders having. I'm sorry. I'm at the wrong question. Is this about XAI, or is this about SpaceX?
Well, both. Because this is saying public long-term shareholders of Tesla will have the ability to invest in other companies.
Yes, and so this is not Tesla's board to decide. This is for Elon and these other two companies, SpaceX and XAI, to decide on their boards with their shareholders whether they want to do a pre-IPO for Tesla shareholders to give them a preferential first come first serve initiative to get there, and then the real IPO. Yes,
Alexandra, that wouldn't be a pre-IPO. That would just be a private placement as part of the IPO.
Well, but for private placement, you need to have all this crap with the educate. What is the word? Where the shareholder has to have at least $250,000 and all this crap. Accredited. Yes, excuse me. I couldn't find the word. While for a pre-IPO, you can actually open it, but we still have to bring the proof that you held your Tesla shares at a certain moment in time and still held them to be able to get eligible. I mean, the management of this, my gosh.
But isn't there an SEC rule that limits it to 2,000 shareholders or something pre-IPO?
Yep.
So that's that. I think Kathy Wood said that at a physical live earnings call. She asked that question, and that's what the SEC needs to change first before this is even possible. So it's out of the hands of Elon Musk. He can say, "Okay, let's do it," but the SEC needs to change their laws first, I think.
What will happen is that Tesla board members will negotiate with XAI board members, and they will sign a deal that Tesla will be able to buy certain percentage of XAI. Therefore, Tesla investors automatically get exposure to XAI.
No. I don't think Tesla's board will be invested at all. And the question was really that us Tesla shareholders who have been holding bags for years have something preferential. It wasn't the board, as you know, the mother of all, is doing it for us in the name of Tesla. No, it would be that you can hold SpaceX shares or XAI shares in your portfolio if you so wish to, and not that you hold Tesla shares who has a little stake in XAI and SpaceX. Now, Tesla's board has nothing to do with it, but I agree with you. I think the SEC is gonna, the SEC rules are gonna prevent it now. And I also don't think that Elon had thought that through when he made the promise. I think he was, you know, enthusiastic. He wants to, and he loves us retail shareholders, right? I mean, we love hearing it, but not sure that that's going to be just an easy one.
What is the limitation for IPO allocations as far as qualified shareholders are concerned?
Because you mean accredited or not? Well, once you're in the IPO, you don't need to be accredited. Once it's public,
the point is that shares allocated in an IPO are not limited to qualified shareholder to accredited.
Correct.
So I didn't understand your point about the limitation. If they're going to go public, if SpaceX is going to go public, they could allocate X million of their shares for retail shareholders and allocate them in the IPO according to and have the underwriters allocated according to the shareholders, you know, share of Tesla.
So the question, I mean, I'm not saying that that's not possible, but the question would be, what would you do with is it only retail shareholders? Does that mean that Simon, who has always been a good Tesla backholder as well, doesn't get any? I mean, and then the retail shareholders, how do they prove it? How do they prove that they have been holding for a long time? I think this is a real, you know, headache before it really sees the day of the light.
Well, they can announce the registration date. I don't know. You know what? I don't know.
Okay.
It's complicated.
I think it could work with preferential shares, that you do an IPO for two classes of shares. One being preferential shares, that are the ones for the Tesla shareholders. They may have an earlier date, they may have a different price, I don't know what. And then the other one for the public. But it would both be an IPO moment. But again, I mean, whenever I start thinking this through, I go, oh my gosh, and then how do you determine who is allowed to be the preferential shareholder or not? Because so if you didn't hold them on the 15th of October 2022, I'm just making up a date, right? Then you're not, or yes, you are. And so the whole thing just gets a whole gas machine. Oh, here I am again, Jeff, my gas machine. He doesn't listen. He's in something else. Hi, Jeff. Are you okay, Jeff?
He's doing numbers and he's doing numbers.
Yeah.
I was wondering.
I'm just thinking like our thesis before this earnings announcement, which was, at least mine was, we haven't heard Elon yet, but his tone, what they guide, and it looks like so far new cars and unsupervised, you know, they're guiding for. We need to hear what they're guiding for in terms of vehicle growth. But like the last priority is honestly the numbers, because if you look at revenue, it's a miss. You look at it's a sizable miss too. You look at earnings, it's a miss. Gross margins are a miss. Cash is great. So to me, like the thesis is playing out, which is the whole thing is moved towards getting to unsupervised, launching new vehicles that enable higher volume, and you know the execution on the model. This whole thing, it seems like the whole thesis is playing out. Otherwise, it wouldn't explain the positive market reaction.
I like what Alexandra said, which is the reason why those are missed is because they are doubling down on autonomy and robots and basically they're doubling down, and that's what they're gonna say.
The investments that they're making are insane, absolutely, across so many different 11 different product lines. It's bonkers. It's completely.
I mean,
FYI, in 28 minutes.
Me on close.
In 28 minutes, we'll watch the webcast directly here, so we're following this carefully.
And while we saw the R&D spend increase this quarter, I think it's still a very, very lean R&D budget, in consideration of all the product lines they're developing.
Truly amazing.
Did somebody follow up on the other? Because there were a couple of earnings coming out, right, at the same hour. So Microsoft, right? And
Meta beat as well. That provided very soft guidance.
But they reconfirmed their capex,
Oh, they did.
60 to 65 billion. Yeah, but you're right. Soft guidance, but beat. I think Microsoft.
I'm always blown away at what when you look at the capex of say all the Mag 7, but when you look at Amazon, when you look at Meta, Microsoft, Google, and you see the size of that capex, and then you look at Tesla, and they're doing the same compute, if not more, or better compute,
quicker,
better compute.
more
It just blows my
efficient.
mind. Like when I look at these numbers, I'm thinking, that's it? Like that's all you spent on compute?
Yeah,
And
I did
they're
a table.
doing
I
it.
did a table 6-8 months ago on exactly that. They are so much more efficient with every dollar than anybody else. It is crazy. They are also so much more efficient per employee. So, when I see numbers and people go, "Oh my God, they're spending more money." Yeah, they're spending more money, but they're spending it for the good cause. So just, don't worry. If you're here for a couple of years, this is just all pointing in the right direction.
Okay,
Yeah,
let's.
I think the recent stock rally off the low in the after hours, like my thesis has been, we've already had the sell-off. All we need is not a
Right.
complete train wreck
Yeah.
on the earnings and the call. I think the call is going to be more important, and the tone of Elon. But all we need is not to be a bad call, not to be a train wreck in earnings, which I don't think these are bad earnings at all. And I think the stock wants to go higher because it's up here because of the things they're working on, FSD, Robotaxi, and Optimus. So I think that, like I said, as long as we don't get a disaster call, we're going to see a pretty decent pop in the stock tomorrow.
Yeah, in fact, as we said, Herbert, I said that to you at the beginning before we even went live, that I couldn't take the risk of waiting for the earnings to happen, because if you look at the chart, we've been bouncing off the 388 level the whole month of January. So it has somebody's stepping in and buying there. I don't know who it is, but that is extremely strong support. So and also history Q4, even though it didn't surprise today, the guidance I think will be extremely bullish for all the good stuff that's coming in 2025. So we'll see.
As long as a smiling Elon turns up, it's going to be golden.
Well, and the other thing, he's got visibility into where FSD is and how close supervised is and where the bot is, etc. So I think we'll see if he has a poker face on or not today as well. By the way, on a separate issue, people always talk about BYD eating Tesla's lunch, etc. Wasn't BYD or in trouble somewhere paying their vendors?
$44 billion in debt.
Yeah.
By waiting 270 days to pay bills.
And then
yes,
asking to pay longer as well.
Well, yes. And I don't know if BYD has a budget for eating anyone's lunch. The reality is Tesla is a big EV player. It is a very big EV market, but they are making all the money on EVs in China. And the other guys will catch up, but the price race is very real, and the competition is mostly competing with each other. Tesla is still a prestige brand. It is an aspirational brand, and the new Model Y is just getting better, and it's not getting more expensive, which is remarkable. It's a very good vehicle already, and now it's an even better one for the same price. China is a very tough, very competitive market, and Tesla is shockingly making one heck of a run in there.
Yeah, I think your point, Brian, about Tesla making all the money in EV that's the higher order bit. Everybody's trying to look at, well, who's the king or who's shipping more? It's like, who's making all the money? And so that goes on steroids when autonomy is released globally.
Most of the market don't really understand that. The amount of clients I've had to speak to when they read all these pieces about, the number of sales per vehicle, and these are very intelligent individuals in different backgrounds and fields. And as soon as I say to them, do you know that they're not making any money? They have no idea. They had no idea. It's like just within this Tesla community that we're so acutely aware of what their profit margins in and what they're doing. But the average person has no idea that Tesla is the only company, not just the only company making profits on EVs, but they're just taking all of the profits.
Well, it's a good number to give everybody is that this month, BYD will hit the mark of 1 million employees.
Wow.
I mean, it's amazing. 1 million employees.
Okay, so in 20 minutes, we're going to have answers to the questions that everybody's asking. This is the top 3 questions that retail investors voted up. Is unsupervised FSD still planned to be released in Texas and California this year? What hurdles still exist? Is Optimus now mostly design locked for 2025 production? When will Tesla start selling Optimus in price? Do you guys think that they will answer all of this? Will they even tell you what the price
they
is?
normally take many more than 3 questions.
No, these are the top 3. We'll go through the rest.
Yeah, they
Yeah.
kind of answered them before. Like in the last quarterly call, these were all asked the same questions, and they'll give the same answers. So they're a little bit redundant, in my opinion.
Mm-hmm.
What do you guys think the retail price is going to be on Optimus?
Well, yeah. When are they going to start selling Optimus in price? I don't know if they'll answer that one. Do you think?
No,
I'm
the
asking the panel.
Yeah.
No way will they answer that.
Yeah.
No.
I think like everything else, the first iterations, I think, Jeff, you may have said this a few months ago, Optimus will go to Tesla first, Tesla suppliers second, and then whoever is after that will be the highest bidders. That's the
Tesla's
timeline.
gotten really good at figuring out the price point, right? They're not leaving a lot of money on the table. So if the demand is extremely high, they're just going to work their way down, similar to what they've done with the Cybertruck and now the Model Y, the new Model Y.
And if you're going to knock the questions, don't knock the second question.
Design lock, that's you, Jet.
Of course.
Yeah.
But it's anonymous. Yeah, that's great, because it looks like at least the most important element of Optimus is the hands. And that seems to be design locked with 22 degrees of freedom, correct?
That terminology is very meaningful, because that means that they've given themselves a recipe to go off and get several thousand pieces of and build up. It doesn't mean that there's not a series of other changes behind it, but what it means is like we're starting up this curve, and you have to do some sort of initial design lock somewhere. They said the same thing around Cybertruck around May of, I think, 2023. So I mean, just anyway, that's an important terminology for them to speak to, and the fact that they put that verbiage in the earnings deck, they added that on page 10 about pilot production. That wasn't there in the prior earnings release. That it looks like the bot has been pulled in.
Yeah, I love it.
And tied to that, though, the rumor of doing somebody's telling suppliers 600 a week, that's a 33,000 ramp by the end of this year. Was that verified?
No, it's not, nothing's been it's a rumor, and that's just an exit velocity of where you want suppliers building at per week. It doesn't mean there's that many sitting on the shelf. It just means that they want to be, at that run rate by the end of the year. And again, it hasn't been confirmed. By the way, when you see things like that, remember there should be very, very few suppliers that are single sourced. So when the demand signal goes out, the demand signal is actually split in a couple of different directions. So if you're getting supplier intelligence, they don't know. They may be one of 3. The suppliers know, but they'll be one of 3 or one of 2 different suppliers. So that intelligence I'd be careful with, but I wouldn't be surprised at that number, quite frankly, by the end of the year. If they're doing, they said they pulled in pilot, I wouldn't be surprised at those numbers at all. The supply base has to run ahead of the factory.
Yep.
Is it unusual, or just interesting at least, that Elon in the last 3 months, he's been out there giving us guidance, giving us numbers. He physically said, right in the last interview, he said 50 to 100,000 bots next year, like actual numbers.
That was news that made news. I mean, that was for us at least. That was not in the prior earnings release. So it looks like in the last 90 days, you said like what happened with, what they made progress on the bot. I shouldn't say that. Of course they're making progress. They're now ready to say that they're pulling it in. Yeah.
Oh man, this is getting exciting. Can't wait. 20 minutes from now, we'll get this going. So those are the questions that they're going to ask questions. Is there any questions you did not pop up in that list that we just showed that people should have asked?
Well, they are on the say questions. I hope they get to them. It's where are we at with batteries, all the batteries, the 4680, the dry electrode, the LFPs in Nevada.
Yeah.
How's it all going? What can we expect? And where are the internal costs at? Because these are the question, especially if we have domestic sourcing requirements. But even if the domestic sourcing requirements are removed, it is energy security is national security. So that is important, especially considering China is still the de facto LFP factory for the world. There are LFP factories that exist outside of China, but they are not significant. They do not contribute a meaningful quantity of batteries to the world market. We just need to get all that sorted out.
I'd love them to do a new battery day.
Yeah.
It would be, I think, helpful for us because there are a lot of questions about batteries. I mean, we're now in, volume production on the 4680. We've reached that benchmark. Now let's try and understand what they're thinking, how they're thinking about battery supply, and what they're thinking about battery supply. Because once the semi goes into production at the end of this year, it's going to consume quite a few batteries.
Exactly. I was thinking the same thing. Is it worth sacrificing? Like, first of all, the batteries that they need for the Cybercab aren't as sophisticated. So they don't need the 4680s in the Cybercab, correct?
Yes.
But CERN just joined us right in
CERN
time.
joined us, and CERN sent me some slides. Mr. Finance.
Have you
Go for it.
modeled the cannibalization of the semi versus vehicles versus Optimus Bot and what it would take to fire on all cylinders? Excuse the pun.
Not specifically, but that would definitely be something worth looking at.
You disappoint me.
Sorry, Dan, didn't get a chance to do that. I've been listening to you guys a little bit, and I think you've done a great job of highlighting some of the things in the quarter. I wanted to give a little visual presentation here, threw some slides together. If you're into margins, this is pretty disappointing this quarter. It goes to show that the auto business is a pretty brutal business, even for a great company like Tesla. Auto gross margins with or without reg credits took a dip down. The gray line is without the reg credits. So that's not a good trend. I think last quarter, we saw a bump up and we were all hopeful that was the turn. Not so. On the next page.
But CERN, the reason we thought it was is not because of cost of goods, which went down. It's because of incentives and because of investment in,
No, again, it's a brutal business. Tesla did an amazing job from an operating standpoint. They did their part, but it was a tough environment to sell cars. This is the business line margins for all three business lines that they report: autos, energy, and service and other. They all took a dip this quarter.
Yep.
So
I was very disappointed with energy this quarter. I really thought we would see it increase. AJ was 100% correct. He said they were going to go down.
Yeah, and even AJ's energy numbers were higher than what Tesla reported. So even he didn't have it low enough.
Yep.
Now, I think it's also true, Larry, that energy is just incredibly lumpy. I don't think any of us really truly understand or are able to model energy on a quarterly basis.
Absolutely right.
Very true.
There's a lot of
if you go back to the prior slide, these are good slides, by the way. I just want to just tell everybody, from being in kind of these cyclical businesses, that Q4 2021, that big peak, I don't believe that's real. So I mean, I believe that we didn't turn a quarter in the last quarter to quarter, but I to me that was the supply shock of COVID. Of there's too few goods, we can raise all of our prices beyond the point of our manufacture of our requirements, and so you had inflated pricing. You also had inflated inbound pricing as well. There's no question about that. But they could basically charge for whatever they want because their lead times were through the roof, and nobody could build a car during that time. So I actually think the terminal rate is closer to the 20 to 25, and that's. So I think if I'm inside of Tesla, I actually don't think in this period between where they are now and getting to autonomy, I think internally they don't care if they're at 15 or 20. I think they want to trend back towards that. But to them, I think they'll make those trade-offs internally to keep stock and channel low, and to really drive this, drive these new vehicle introductions, and so they can have more vehicles available for autonomy. I mean, would they want to be at 20% this quarter? Yeah, but to what they needed to do is they need to keep the factories full, keep utilization high, and work this transition into the new Model Y. And that's what they did. But I just don't view the 30% as like, that's like, we're going to get back to that on hardware. I mean, is it out of the realm of possibility? No, but I just think that this is more of a 20 to 25% on bending metal and shipping it. But the total
with one
auto gross
exception.
margins with autonomy will be through the roof.
Jeff, with one exception. They could probably sell a robocab at a 30% margin. If they were going to sell it to a third party, I think they would make that kind of margin.
Yeah, and maybe remember that it's that whole thing, Larry, of it's got to start from somewhere, and it's going to start at very high COGS. But in terms of the market pricing, I'm sure it can be very high in the beginning. I think it will be. I think the market pricing for bot is going to be very high in the beginning. But that's what I think happened. Yeah.
The robocab margin is going to be very high as long as they have a clear margin, a clear price advantage, a very clear price advantage over any other autonomous car on the road. So any other autonomous car on the road right now has got, all kinds of devices and very high cost. And I think there'll be a very big price advantage for a very significant amount of time for that robocab.
So I wanted to point out in 21, we had artificially high margins due to the leases from 2018 coming back and being sold as basically brand new vehicles once again. They got to sell the same cars twice because there were just no cars. Remember in 2018, Elon had said, look, we're not going to let you buy out your lease. We want these for our robotaxi network in 2018. And as those cars started flooding back in, they were being sold at really high prices. Wow. And we won't see that again.
Too few supply.
Yeah. Oh, yeah.
Created huge. They could set the pricing whenever they wanted.
Yeah. We have 10 minutes before the actual earnings call. So, sir, did you want to continue?
Yeah, just flip to the next page, please, Herbert. This is trying to get a handle a little bit on the energy business in terms of this revenue per megawatt hour deployed. And you can see that this number just on a quarterly basis has come way down. And this last quarter, it was at 277,000. Again, this is not complete. This is not necessarily indicative of where energy really is. It's a very lumpy business. We may see this number be higher in the first quarter, but at least it's a kind of a raw look at the trends in the energy business. So while the number of megawatt hours deployed every quarter or over time are going up a lot, the revenue per megawatt hour is coming down. It'll be interesting to see sort of where it stays for the next 4 quarters.
Yeah.
But that's a bit of a headwind in terms of revenue. Here's the gross margins on energy. Last quarter was fantastic at 30. That seemed like a bit of an outlier. And now with another data point in Q4 at back to 25%, that's more consistent with where we were in the 4 quarters prior to that 30% print. So we'll see if that sticks. Here's the cumulative gross profit for Tesla Energy. Obviously, this business is doing extremely well. No reason to believe that it won't continue to produce a lot of profit for the company. And it's still Tesla's most profitable business unit, even though the margins were down this last quarter. Services and other.
One thing, just Søren, very quickly on the last slide for the audience to know, this is going to more than double in 2025, correct, with Shanghai?
Right. It certainly could. Again, it depends on the lumpiness of deployments, James, but certainly going forward with the additional capacity they have in Shanghai, a more than double, I think, should be expected here over time.
So prices in China may well be significantly lower. Mm-hmm. So while volumes of units may double, prices may not. The revenue may not double.
Yeah, it might be a situation where volume triples and prices double or something like that.
Exactly.
Yeah. All right, energy. Services and other. Certainly, we're seeing some progress there on gross margin. This quarter, a little bit of a slippage from 8.8% in Q3 down to 4.2%. Again, that might just be some one-time things in the quarter, or perhaps that 8.8% in Q3 was some kind of outlier. So we'll have to watch that. But certainly, this business unit is contributing to profitability. And you can see that we are approaching profitability all time for this business unit. It's lost money since inception. It's lost about $400 million, and so maybe sometime next year it's profitable. So that's kind of a nice visual in terms of how that business is performing. If we take a look at gross margins and net margins, gross margin went down the blue line. Talked about that. The net margin was flat with the prior quarter, but what was holding that up was a recognition of about $590 million on gains of digital assets, Bitcoin holdings. So if it wasn't for that, the net margin would have gone down kind of in step with the gross margin decline.
Mm.
Yeah.
Okay. So for those that are focused on margins, this looks like a pretty brutal quarter for Tesla. But as everybody here is well aware and has been discussing, this is a company that's preparing itself for the future. This is not about maximizing profitability in the near term. And so to that end, Jeff, this chart's for you, although he's disappeared here. This looks at the average selling price for autos versus the cost to make. Both are going down, although in Q4, the selling price went down more than the cost. So margins were compressed.
Mm-hmm.
The difference between the two lines is Tesla's profitability. So as those lines squeeze together, Tesla's profitability is squeezed a little bit as well.
And this goes back to what we discussed at the beginning. Does it even make sense to sell cars in the future when you can do cybercabs?
It won't ultimately.
Yep.
It won't make any difference. Yeah.
And also, imagine if they weren't able to bring down a cost to make the cars and it was just flat like this. That's where you would have been paying.
They're still making about $5,000 a year per car. Sorry, $5,000 per car. If you go to the next slide, Herbert, you can see the bar charts that show that. Yes, that's a lower number than where they've been, but that's still pretty profitable when you compare them to other automakers. And again, as I mentioned early on, this is a brutal industry to try to make money in. And
there
Tesla
are cars in China that are cheaper than $5,000.
That's right.
So yeah, crazy.
Yeah. And then from a financial perspective, look at their operating cash flow growth. This was the third best quarter they've ever had for operating cash flow. So not too bad. And then their cumulative free cash flow, which is really the only thing that matters at the end of the day. How much cash flow, free cash flow does the company generate? And that was a couple of billion this quarter. And the cumulative free cash flow now since 2012 is about $15 billion. So still making progress there. And again, despite heavy investments. And if you go to the next page, the cumulative CapEx and R&D since 2012 is over $70 billion. And as mentioned, Tesla's not spending as much as some of the other big tech companies, but they spend it very, very wisely, very smartly. So this capital has been deployed very, very well.
A quick accounting question from the previous thing on the digital assets. They mark to market the gain on Bitcoin. Does that mean they are taking advantage of the new FASB accounting rules?
That's my guess, James.
Yep.
Yeah.
Okay, that's what I thought.
Going forward, the gain or loss would be in their earnings.
Yep. Which actually pulls away from cash flow because it's an unrealized amount, correct?
It hurt the cash flow this quarter. That's right. Yep. So then of that 70 billion, 50 billion of that has been CapEx, 20 billion was R&D. And of the 50 billion that Tesla has spent on CapEx, I like to look at the regulatory credits as being the aiding factor in that. So if you go to the next slide, you can see quarter to quarter, there's their CapEx spend, which is the total of these blue and red bars. But the blue part of the bar is funded by their competition. in the regulatory credits that Tesla receives.
That's so
That-
sweet.
So
And that was-
every single quarter, their competitors give Tesla a bunch of money, in this case, about $700 million this last quarter, to build more factories to compete against them. I don't know of any other business where that happens. It's really pretty astounding. And so since 2018, on the next slide, Herbert, competitors have given Tesla $10 billion of their money to compete against them. And Tesla has funded their capex since this period of time, 29 billion of their own money that's been funneled in capex. So their competitors have paid for about 25% of Tesla's capital expenditures since Q3 2018.
That is so sweet.
That's a
then
great slide.
We got to
Yeah.
finish this up.
Just the visual of the reg credits, yes, they go up and down, but
Okay.
it's over $10 billion since 2018. It's really pretty astonishing.
That's it.
Yeah, it'll go away one day.
Okay. Wow. That's brilliant. Thank you so much, Cern. This is unmatched what you're able to deliver for us. Full of great information.
Yeah. On those credits, does that accelerate the demise of the ICE competitors?
It does.
Yep.
The more capacity that Tesla can build, the more they can, the more cars they can manufacture, it certainly hurts them. Having an extra 10 billion in your pocket that you wouldn't have otherwise had, that's never a bad thing.
Can you hear this?
Can't hear.
Hear
Not yet.
nothing.
You can hear it?
No.
No, but if there's music, it might be copyright anyway. But yeah, I definitely can't hear it.
Okay, let me
Not going to be copyright.
redo it just so I'll make sure I would get there. It's going to start in a couple minutes here.
The other quick thing I would say is, do they start?
Can you hear it?
No.
When those new lower cost vehicles start production, they are going to help bring everything else back to closer to 20% of gross margin, because they're going to absorb the same fixed costs that are there on the 3Y today. They're going to bring fixed cost allocation on those vehicles down. So 3Y COGS will actually come down as the newer vehicles ramp up. So anyway, it should be an interesting thing, but they position themselves by doing this. They position themselves in a way to grow volumes, absorb more of the fixed costs, and take their gross margins up. So let's get this show on the road.
I pinged you, Herbert. There should be music. I played it on my side.
Yeah, you got to click on that speaker on the web page. See if that helps.
I think you did that.
Do that.
There it
You
is.
go.
There it
You got
is. Yay! I'm gonna
Brian
start
dancing.
dancing. Yeah, I'm gonna have to.
Can you hear it now? Yes.
Yes.
Yeah.
Definitely.
Okay.
I'd say maybe go ahead and turn it down or mute it so that we don't all get strikes. But but if I need to, I can just trim it out of the. There you go. That's better. And then we've got. Yeah. So this is exciting. These are the kind of quarters I like to see. There was nothing crazy. There's nothing that felt one time. I know there's a lot of people who are of the mind that regulatory credits are not forever. Well, I've been hearing that for 5 years. And while I believe that is true, they are not forever. They are still very much real dollars that impact the bottom line like any other real dollar. And the margin is, 100%. So I think those are, and they're, even if they are eliminated in one market, they may remain in other markets because no matter what the US does, the rest of the world is still committed to electrification. And not the entire rest of the world, but the overwhelming majority of markets where automobiles are sold have commitments to go at least largely, if not entirely, to electrification by 2035 in many countries. And even some developing nations like Ethiopia have very aggressive electrification timelines in place. I was mentioning in the chat on my show that Argentina just removed all import restrictions and tariffs on electric vehicles. They want to, they've got a lot of hydro. Let's use some of it, huh? And so that's something that's going to help them. We're seeing a lot of very compelling, affordable models coming out of China. Those will be able to be sold in a lot of those countries. UK is a good example of a country that is welcoming to Chinese EVs. We're going to see more of that, and those regulatory credits, while they will at some point diminish and eventually end, for now they are still very much real dollars, hundreds of millions per quarter. This is legacy auto paying Tesla to build factories. I'm here for it. Anyone have any thoughts on that?
Yeah, I just went to Ford and GM financials to see how much they're spending on research and development. I couldn't find it, but their SG&A is much higher, so seems weird. But SG&A for Tesla is 5%, so is their R&D.
Well, worth mentioning at Tesla, a lot of the R&D gets absorbed in just everybody's paycheck because everybody is the R&D.
Correct.
I've talked with employees who've worked at different Tesla factories, and I've always asked them, is it true that they accept your input? And they said, no, not accept, they require it. And if we're not giving input, what, you think things are running perfect? Because they're not, nothing's perfect. What do we need to do better? And while I run out of headspace for my primary job, Google found years ago that you can give people a second job that they can kind of do sometimes, and that's what Tesla does. Everybody's in that R&D department on the side where they've got a whole fresh bucket of headspace they can employ to solve problems that make their everyday job better and easier. And things like the cars driving themselves from end of line to the delivery staging area is a great example of that. Nobody loves that job. That's not a job people yearn for, driving a car 1 mile and then waiting for a shuttle back. That's not fun. So yeah, it's interesting to see how it's all changing.
I don't know. Did you guys see this? There's subtitles that appear sometimes as "You are here."
Yeah.
Where's that coming from?
I thought I was here actually.
Okay.
That's why we love you, Larry.
Here we go.
Good afternoon, everyone, and welcome to Tesla's fourth quarter 2024 Q&A webcast. My name is Travis Axelrod, the head of investor relations here at Tesla, and I am joined today by Elon Musk and Vaibhav Taneja and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So in summary, in Q4, we set a record and delivered vehicles at an annualized rate of nearly 2 million a year. Congratulations to the Tesla team on excellent work achieving record production and deliveries. Model Y was the best-selling vehicle of any kind for 2024. That's worth noting. Not just the best electric vehicle, the best vehicle of any kind on Earth, number one, was Model Y. We're staying focused on maximizing volumes and obviously doubling down for, I don't know what, really, I was going to say doubling down on autonomy, but really it's like autonomy is like 10xing things, frankly. Doubling is not even enough. We made many critical investments in 2024 in manufacturing AI and robotics that will bear immense fruit in the future. Immense. Like it's, in fact, to such a scale that it is difficult to comprehend. And I've said this before, and I'll stand by it. I see a path. I'm not saying it's an easy path, but I see a path to Tesla being the most valuable company in the world by far. Not even close. Like maybe several times more than. I mean, there is a path where Tesla is worth more than the next top 5 companies combined. There's a path to that. I mean, I think it's like an incredibly, it's like a difficult path, but it is an achievable path. And that is overwhelmingly due to autonomous vehicles and autonomous humanoid robots. So our focus is actually building towards that. And that's what we're laying the ground. We laid the groundwork for that in 2024. We'll continue to lay the groundwork for that in 2025. In fact, more than lay the groundwork, actually, so be building the structure. We're building the manufacturing lines, like I'd like setting up for what I think will be an epic 2026 and a ridiculous 27 and 28. Ridiculously good. That is my prediction. As yet, very few people understand the value of full self-driving and our ability to monetize the fleet. I've some of these things I've said for quite a long time, and I know people have said, well, Elon's the boy who cried wolf like several times, but I'm telling you, there's a damn wolf this time, and you can drive it. In fact, it can drive you. It's a self-driving wolf. For a lot of people, their experience of Tesla autonomy is like, if it's even a year old, if it's even 2 years old, it's like meeting someone when they're like a toddler and thinking that they're going to be a toddler forever. But obviously not going to be a toddler forever. They grow up. But if their last experience was like, oh, FSD was a toddler, it's like, well, it's grown up now. Have you seen it? It's like walks and talks. That's really what we've got. And it's difficult for people to understand this because human intuition is linear, as opposed to what we're seeing is exponential progress. So that's why my number one recommendation for anyone who doubts is simply try it. Have you tried it? When's the last time you tried it? And the only people who are skeptical are those who have not tried it. So, a passenger car typically has only about 10 hours of utility per week out of 168. A very small percentage. Once that car is autonomous, my rough estimate is that it is in use for at least a third of the hours of the week. So call it 50, maybe 55 hours of the week. And it can be used for both cargo delivery and people delivery. So even, let's say people are asleep, but you can deliver packages in the middle of the night or resupply restaurants or whatever the case may be, whatever people need at all hours of the day or night. That same asset, the thing that is these things that already exist with no incremental cost change, just a software update, now have 5 times or more the utility than they currently have. I think this will be the largest asset value increase in human history. Maybe there's something bigger, but I just don't know what it is. And so people who look in the rearview mirror are looking for past precedent, except I don't think there is one. So, but the reality of autonomy is upon us. And I repeat my advice: try driving the car, or let it drive you. So now it works very well in the U.S., but of course it will over time work just as well everywhere else. Yeah. So we're working hard to grow our annual volumes. Our constraint this year, our current constraint is battery packs this year, but we're working on addressing that constraint. And I think we will make progress on addressing that constraint. And then things are really going to go ballistic next year, and really ballistic in 27 and 28. So, yeah. So a bit more on full self-driving. Our Q4 vehicle safety report shows continued year-over-year improvement in safety for vehicles. So the safety numbers, if somebody has supervised full self-driving turned on or not, the safety differences are gigantic. And people have seen the immense improvement with version 13 and with incremental versions in version 13. And then version 14 is going to be yet another step beyond that is very significant. We launched the Cortex training cluster at Gigafactory Austin, which was a significant contributor to FSD advancement. And we continue to invest in training infrastructure at our Texas headquarters. So the training needs for Optimus humanoid robot are probably at least ultimately 10x what's needed for the car, at least to get to the full range of useful roles. You can say, like, how many different roles are there for a humanoid robot versus a car? A humanoid robot has probably 1,000 times more uses and more complex things than in a car. That doesn't mean the training scales by 1,000, but it's probably 10x. Now you can do this progressively, so it doesn't mean like Tesla is going to spend like $500 billion in training compute, because we will obviously train Optimus to do enough tasks to match the output of Optimus robots. But obviously the cost of training is dropping dramatically with time. So, but it is like it's one of those things where I think long-term Optimus will be. Optimus has the potential to be north of $10 trillion in revenue. Like it's really bananas. So then you can obviously afford a lot of training compute in that situation. In fact, even $500 billion of training compute in that situation would be quite a good deal. Yeah. The future is going to be incredibly different from the past, that's for sure. We live at this unbelievable inflection point in human history. So, yeah. So, the proof is in the pudding. So we're going to be launching unsupervised full self-driving as a paid service in Austin in June. So, I've talked with the team. We feel confident in being able to do an initial launch of unsupervised, no one in the car, full self-driving in Austin in June. We already have Teslas operating autonomously unsupervised full self-driving at our factory in Fremont, and we'll soon be doing that at our factory in Texas. So thousands of cars every day are driving with no one in them at our Fremont factory in California. They will soon be doing that in Austin and then elsewhere in the world, the rest of our factories, which is pretty cool. And the cars aren't just driving to exactly the same spot, because obviously it all wouldn't collide at the same spot. The cars are actually programmed with what lane they need to park into to be picked up for delivery. So they drive from the factory end of line to their destination parking spot to be picked up for delivery to customers. And they're doing this reliably every day, thousands of times a day. It's pretty cool. Like I said, the Teslas will be in the wild with no one in them in June in Austin. So what I'm saying is, this is not some far off mythical situation. It's literally, 5, 6 months away, 5 months away, kind of thing. And while we're putting our toe in the water gently at first, just to make sure everything's cool, our solution is a generalized AI solution. It does not require high precision maps of a locality. So we just want to be cautious. It's not that it doesn't work beyond Austin. In fact, it does. We just want to put a toe in the water, make sure everything is okay, then put a few more toes in the water, then put a foot in the water, with safety of the general public and those in the car as our top priority. With regard to Optimus, obviously I'm making these revenue predictions that sound absolutely insane. I realize that, but they are. I think they will prove to be accurate. Now with Optimus, there's a lot of uncertainty on the exact timing, because it's not like a train arriving at the station for Optimus. We are designing the train and the station and in real time while also building the tracks. and so they're like, why didn't the train arrive exactly at 12:05? I'm like, we're literally designing the train and the tracks in the station in real time so you're like, how can we predict this thing with absolute precision? It's impossible. The normal internal plan calls for roughly 10,000 Optimus robots to be built this year. Will we succeed in building 10,000 exactly by the end of December this year? Probably not. But will we succeed in making several thousand? Yes, I think we will. Will those several thousand Optimus robots be doing useful things by the end of the year? Yes, I'm confident they will do useful things. Those Optimus in use at the Tesla factories, production design 1, will inform what we change for production design 2, which we expect to launch next year. And our goal is to ramp Optimus production faster than maybe anything's ever been ramped. Meaning, like, aspirationally, an order of magnitude ramp per year. Now, if we aspire to an order of magnitude ramp per year, perhaps we only end up with a half order of magnitude per year. But that's the kind of growth that we're talking about. It doesn't take very many years before we're making 100 million of these things a year. If you go up by, let's say, a factor, by 5x per year. It's insane. Not 50%, 500%. So, these are big growth numbers. But we do need to. This is an entirely new supply chain. It is entirely new technology. There's nothing off the shelf to use. We tried desperately with Optimus to use any existing motors, any actuators, sensors. Nothing worked for a humanoid robot at any price. We had to design everything from physics first principles to work for a humanoid robot, and with the most sophisticated hand that has ever been made before, by far. And Optimus will be able to play the piano, and be able to thread a needle. I mean, this is the level of precision no one has been able to achieve, and so it's really something special. So my prediction long term is that Optimus will be overwhelmingly the value of the company. Regarding energy, back to Earth. Earth Elon. Can you come back here for a minute? Okay, back to Earth. Energy storage is a big deal, and will become. It's already super important. Will become incredibly important in the future, and it is something that enables far greater energy output to the grid than is currently possible, because the grid, the grids are the vast majority of the grid has no energy storage capability, so they have to design the power plants for very high peaks, and assuming that there's no energy storage. Once you have grid energy storage and home-based energy storage, the actual total energy output per year of the grid is dramatically greater than people think. Maybe it's at least double. This will drive the demand of stationary battery packs, and especially the grid scale ones, to insane, basically as much demand as we could possibly make. We have our second factory, which is in Shanghai, that's starting operation, and we're building a third factory. So we're trying to ramp output of the stationary battery storage as quickly as possible. Now, there is a challenge here where we have to be careful that we're not robbing from one pocket to take to another pocket, because for a given gigawatt hours per year of cell output, we have to say, does it go into stationary applications or mobile applications? It can't go into both. So we have to make that trade-off. But overall, the demand for total gigawatt hours of batteries, whether mobile or stationary, that will grow in a very, very big way over time. So in conclusion, 2025 really is a pivotal year for Tesla. And when people look back on 2025 and the launch of unsupervised full self-driving, true real-world AI that actually works, I think they may regard it as the biggest year in Tesla history, maybe even bigger than our first car, the Roadster, or the Model S, or the Model 3, or Model Y. In fact, I think it probably will be viewed 25 as maybe the most important year in Tesla's history. There is no company in the world that is as good at real-world AI as Tesla. I don't even know who's in second place. Like, you say, who's in second place for real-world AI? I would need a very big telescope to see them. That's how far behind they are. All right.
Great. Thank you very much, Elon. And Vaibhav has some opening remarks as well.
Yeah, I'll talk about things on Earth. As Elon mentioned, in Q4, we set records in vehicle deliveries and energy storage deployments in an uncertain macro environment. We were able to grow auto and energy storage volumes both sequentially and on a year-on-year basis. For this, I would like to thank the efforts of everyone at Tesla to make this a reality, and our customers who helped us achieve this feat. Coming into the fourth quarter, our focus was to reduce inventory levels in the automotive business, and we accomplished that by ending the quarter with the lowest finished good inventory in the last 2 years. This was a result of offering not only attractive financing options, but also other discounts and programs, which impacted ASPs. While we saw volume growth in almost all regions that we operate in, we hit a new record for deliveries in the Greater China market. This is an encouraging trend since we grew volume in a highly competitive BEV market. On the automotive margin front, we saw a quarter-over-quarter decline, primarily due to lower ASPs and due to the recognition of FSD-related revenue in Q3 from feature releases. Our journey on cost reduction continues, and we were able to get our overall cost per car down below $35,000, driven primarily by material costs. This was despite increased depreciation and other costs as we prepare for the transition to the new Model Y, for which we recently started taking orders in all markets. All our factories will start producing the new Model Y next month. While we feel confident in our team's abilities to ramp production quickly, note that it is an unprecedented change, and we're not aware of anybody else taking the best-selling car on the planet and updating all factories at the same time. This changeover will result in several weeks of lost production in the quarter. As a result, margins will be impacted due to idle capacity and other ramp-related costs, as is common in any launch, but will be overcome as production is ramped. We will be introducing several new products throughout 2025. We are still on track to launch a more affordable model in the first half of 2025, and we'll continue to expand our lineup from there. On a dollar-for-dollar basis, we believe we have the most compelling lineup today compared to the industry, and it will continue to get better from here. As always, all our products come with the best software in the industry, autonomy features, and capable of full autonomy in the future. And despite the premium experience, the total cost of ownership is close to mass market, less premium competitors. Energy storage deployments reached an all-time high in Q4 and resulted in, but declined sequentially. This was a result of growth came from Megapack and Powerwall. Both businesses continue to be supply constrained, and like Elon mentioned, we're trying to ramp up production with Megafactory Shanghai coming online this quarter onwards. While quarterly deployments will likely continue to fluctuate sequentially, we expect at least 50% growth in deployments year over year in 2025. Gross profit and margins in the service and other business was up year over year, but declined sequentially. This was the result of higher service center costs and lower profit from used car business. The businesses within service and other primarily support our new car business, especially through their impact on total cost of ownership. Therefore, while we manage them to be positive on a GAAP basis, we do not expect similar margins as the rest of the business. There's a lot of uncertainty around tariffs. Over the years, we've tried to localize our supply chain in every market, but we are still very reliant on parts from across the world for all our businesses. Therefore, the imposition of tariffs, which is very likely, and any reciprocity will have an impact on our business and profitability. Our operating expenses grew both year over year and sequentially. The biggest driver of the increase was R&D as we continue to invest in AI-related initiatives. The remaining increase came from growth in our sales capabilities and marketing efforts from referral program. For 2025, we expect operating expenses to increase to support our growth initiatives. It is important to point out that the net income in Q4 was impacted by a $600 million mark-to-market benefit from Bitcoin due to the adoption of a new accounting standard for digital assets, whereby we'll take mark-to-market adjustments through other income every reporting period going forward. Our free cash flow for the quarter was $2 billion, and despite CapEx increase of over $2.4 billion in 2024, we were able to generate free cash flow of $3.6 billion for the year. CapEx efficiency is something we are extremely focused on. While we have invested in AI-related initiatives, we have done so in a very targeted manner to utilize this spend to get immediate benefits. The build-out of Cortex was accelerated because of the actually helped accelerate the rollout of FSD version 13. Accumulative AI-related CapEx, including infrastructure, so far has been approximately $5 billion. And for 2025, we expect our CapEx to be flat on a year-over-year basis. In conclusion, like Elon said, 2025 is going to be a pivotal year for Tesla. There are a lot of investments which we've made and will continue to make in this coming year, which will set the pace for the next phase of growth. And it is something which now I'm getting out of Earth. It is going to be out of this world. And we just are putting the right foundation. And that's all I have.
Great. Thank you very much, Vaibhav. Now we will move over to investor questions, and we'll start with say.com. The first question is unsupervised FSD still planned to be released in Texas and California this year? What hurdles still exist to make that happen? You addressed the Texas piece, I think, already. So
yeah, I'm confident that we will release unsupervised FSD in California this year as well. Yeah. In fact, I think we will most likely release unsupervised FSD in many regions of the country, of the US, by the end of this year. Like I said, we're just putting a toe in the water, then a few toes, then a foot, then leg, then, make sure everything's cool. We're looking for a safety level that is significantly above the average human driver. So it's not anywhere like much safer, not like a little bit safer than human, way safer than human. So the standard has to be very high, because the moment there's any kind of, accident with an autonomous car, this immediately gets worldwide headlines, even though about 40,000 people die every year in car accidents in the US. And most of them don't even get a mention anywhere. But if somebody scrapes a shin with an autonomous car, it's headline news.
We want to avoid that.
Yeah. So it's really the only thing holding us back is an excess of caution. But people can certainly get a feel for how well the car would perform as unsupervised FSD by simply allowing the car to drive you around your city and see how many times did you have to intervene, not where you wanted to intervene or were a little concerned, but how many times did you have to intervene for definite safety reasons. And you will find that is currently very rare, and over time, almost never.
Great. Thank you very much. The next question is, are there any discussions with other auto companies about licensing FSD?
Yes. What we're seeing is, at this point, significant interest from a number of major car companies about licensing Tesla Full Self-Driving technology. What we've generally said is the best way to know what to do is take one of our cars apart, and then you can see where the placement of the cameras are, what the thermal needs are of the Tesla AI inference computer. That's better than us, sending some CAD drawings. And then we're only going to entertain situations where the volume would be very high. Otherwise, it's just not worth the complexity. And we will not burden our engineering team with laborious discussions with other engineering teams until we obviously have unsupervised full self-driving working throughout the United States. I think the interest level from other manufacturers to license FSD will be extremely high once it is obvious that unless you have FSD, you're dead.
Great. Thank you very much. The next question is Optimus now mostly design locked for 2025 production?
Optimus is not design locked. So when I say we're designing the train as it's going to, we're redesigning the train as it's going down the tracks while redesigning the tracks and the train stations.
Yeah, we've already answered.
Mm-hmm. Yeah, it's rapidly evolving. It's rapidly evolving in a good direction. It's pretty damn amazing, actually. The team's doing a fantastic job. We really have by far the best team of humanoid robotics engineers in the world. And we also have all the other ingredients necessary, because you need a great battery pack, you need great power electronics, you need great charging capability, you need great communications, good Wi-Fi and cellular connectivity. And of course, you need real-world AI, and then the ability to scale that production to huge levels. So you have to design for manufacturing. The things what other companies are missing is they're missing the real-world AI, and they're missing the ability to scale manufacturing to millions of units a year.
I think that is an underappreciated thing, that industrialization of design is a whole different thing than making a design.
Yeah, prototypes are trivial, basically. Prototypes are easy, production is hard. I've said that for many years. The problem is that there's those who've never been involved in production or manufacturing somehow think that once you come up with some eureka design that you magically can make 1 million units a year. And this is totally false. There needs to be some Hollywood story or where they show actually the problem is manufacturing.
Or they can,
I never even heard of one. It just doesn't fit the narrative. The Hollywood thing is like, it's like some lone inventor in a garage goes eureka, and suddenly it files a patent, and suddenly there's millions of units. But like, listen, guys, we're missing really 99% of the story. 1% is, that old saying, 1%, like a product is 1% inspiration, 99% perspiration. The Hollywood shows you the 1% inspiration but forgets about the 99% perspiration of actually figuring out how to make that initial prototype manufacturable and then manufactured at high volume such that the product is reliable, low cost, consistent, doesn't break down all the time. And that is 100 times harder, at least, than the prototype.
Then you have to get it there, deliver it back. Yeah,
you're going to meet all these regulations, and there's a zillion regulators around the world. It's very difficult.
Great, thank you. The next question is also Optimus related. When will Tesla start selling Optimus, and what will the price be?
Well, for this year, we expect to just close the loop with Optimus being used internally at Tesla, because we obviously can easily use several thousand humanoid robots at Tesla for like the most boring, annoying tasks in the factory, like the tasks nobody wants to do, where we have to like beg people to do this task, and then it's like the robot's totally happy to do the boring, dangerous, repetitive task that no humans want to do. And that's also actually some of the easiest use cases for us to, have Optimus do things like, like load the hopper, like for, like say in body line, if you're like transporting, pieces of sheet metal to the robot, which is already a robot, the robot welding line for the body, and you just have to nonstop take things out of a from one fixture to another fixture. And it's a very boring job. That's the kind of thing what Optimus could do.
the guy who runs around and dumps all the weld studs in the bins.
Yeah, there's a ton of boring jobs, tedious jobs, dangerous, slightly dangerous jobs that's perfect for Optimus. So we expect to use Optimus for those tasks at our factories, and that'll help us close the loop for improvement this year. It's really with production version 2, which I think launches sometime next year. I'd like it to be the beginning of next year, but maybe it's more like the middle of next year. And then we have to just with a production line that is designed for on the order of 10,000 units a month versus 1,000 units a month. So like when you design a unit when you design a production line for 1,000 units a month, it takes you a while to actually reach anywhere close to 1,000 units a month. When you design, and for any given production output, it takes you a while to actually reach its potential. But the current line that we're designing is for roughly 1,000 units a month of Optimus robots. The next line would be for 10,000 units a month. The line after that would be for 100,000 units a month. And I think probably with version 2, that is a very rough guess, because there's so much uncertainty here. Very rough guess that we start delivering Optimus robots to companies that are outside of Tesla in maybe the second half of next year, something like that. But like, so this is such an exponential ramp that it'll go from no one's receiving humanoid robots to these things like coming out like crazy.
So we can't build enough.
Well, we're always going to be in the we can't build enough situation. Demand will not be a problem, even at a high price. And then, as I said, like once we're at a steady state of above 1 million units a year, I think the production, I'm confident at 1 million units a year that the production cost of Optimus will be less than $20,000. If you compare the complexity of Optimus to the complexity of a car, so just the total mass and complexity of Optimus is much less than a car. So I would expect that at similar volumes to, say, the Model Y, which is over 1 million units a year, that you'd see Optimus be, I don't know, half the cost, or something like that. What the price of Optimus is a different matter. The price of Optimus will be set by the market demand.
Great. Thank you very much. The next question is, what is the status on mass production of the Tesla Semi, and how will it impact revenue at scale?
I can take that one. So we just closed up the Semi factory roof and walls last week in Reno. It's ahead of schedule, which is great. With the weather in Reno, you never know what's going to happen. But we're prepping for mechanical installation of all the equipment in the coming months. The first builds of the high volume Semi design will come late this year in 2025 and begin ramping early in 2026. But as we've said before, the Semi is a TCO no brainer. Like it's really similar to Optimus. It's going to be, set by how much people pay, and then it as the total cost of ownership, it's much cheaper than any other transportation you can have. So at that point, when we're at scale, it will meaningfully contribute to Tesla's revenue. Well, I think it's difficult to say how much. Anything you want to add, Elon?
No, I mean, I do think that Tesla Semi, again, with autonomy, is going to be incredibly valuable. That we actually have a shortage of truck drivers in America. That's one of the limiting factors on transport. People are human, so they get tired, and sometimes, there's. I have a lot of respect for truck drivers because it's a tough job. But because it's a tough job, there's not that many people that want to do it, and there's actually fewer. I believe, if my understanding is correct, there are fewer people entering truck driving as a profession than are leaving it.
Yes.
So when you think, yeah, exactly. So when you consider, okay, there's more people leaving truck driving as a profession than entering it, well, we're going to have a real logistics problem as time goes by. So autonomy will be very important to meet that need. It'll. I don't know. It's a several billion a year opportunity, which I don't know in this context, is that these days does several billion a year matter? I think it does. Not nothing. It's probably it's probably like a 10 billion a year thing. Yeah, it's $1 billion a month at some point probably. But it's all this is going to pale in comparison to Optimus. So yeah, $1 billion a month it's a lot, but it's not. It's going to be like 1% of Optimus or something.
Great. Thank you very much. We already covered the next question in opening remarks. So moving on, is it expected that Tesla will need to upgrade Hardware 3 vehicles? And if so, what is the timeline and expected impact to Tesla's CapEx? I think they're referring to cost there.
They're really asking the tough questions, aren't they?
I guess we haven't stopped working on Hardware 3 yet. We are still making software releases. We released the 12.6 release recently, which was like a baby V13, but it's a significant improvement compared to what they had previously. And people are still finding ways to distill larger models into smaller models. So we're not giving up on Hardware 3. We're still working on it. Just the releases will trail the Hardware 4 releases.
Great. Thanks, Ashok.
Yeah. I mean, I think the honest answer is that we're going to have to upgrade people's Hardware 3 computer for those that have bought full self-driving. And that is the honest answer. And that's going to be painful and difficult, but we'll get it done. Now I'm kind of glad that not that many people bought the FSD package.
Great. Thanks, Elon. The next question. Has Tesla given up on ramping their solar roof product?
No, we're sorry, Mike. Oh, Mike, go ahead. Yeah.
Oh, yeah, I can take it. Yeah, solar roof remains a core part of the residential product portfolio, and it still remains where it draws a lot of customer interest despite it being premium products. We've worked on multiple iterations of engineering to make the product easier to install and distribute by reducing the SKU count. And more recently, rather than direct installation, we are focused on growth through our nationwide network of certified installers And many of those, they've been installing Solar Roof with us for many years.
Yeah, that's actually turned out to be a much better way for is just let the roof, just supply product to the roofing industry. And especially when somebody's is getting a new roof anyway, or building a house from scratch. Obviously, this is by far the most efficient time to put in a solar roof, as opposed to putting a solar roof on a house where the roof still has 20 years of life. That's not economically sensible, but if it's a new house or the roof needs to be replaced anyway, then solar roof can make a lot of sense. And it is a premium product. It's like it's kind of like Model S, Model X or something. It's like it's a premium product. I think it looks really cool. And your house generates electricity, and if you combine it with the Tesla Powerwall battery, then you can be self-sufficient. So even if the grid turns off for several days, your house still works. And your roof looks awesome. So it's like, I recommend anyone who can afford it, get the Tesla Solar Roof and the Powerwall. Your family's life might depend on it.
Get enough.
And just in terms of convenience, your kids are not going to yell at you because their computers don't work because the power went out and you can't charge your phone.
True story.
Actually happens. Yeah. You literally can't even call anyone because your phone's out of juice.
Thank you very much. The next question was covered in opening remarks, so we will skip that. And the last question from say.com, what technical breakthroughs will define V14 of FSD, given that V13 already covered photon to control?
Well, we've gone a hell of a lot further than photons to output. We've been in sort of the nothing but nets situation, nothing but neural nets from photons to controls for a while now. We're just improving the neural nets. I guess we could get into some of the technical details to some degree. I have to say, I continue to be amazed by just how effective autoregressive transformers are at solving a wide range of problems. I mean, Ashok, is there anything you'd like to add there without giving away the sort of family secrets?
I mean, except for things we put on X already. Yeah, so continuing to scale the model size a lot. We scale a bunch in V13, but then there's still room to grow. So we're going to continue to scale the model size. We're going to increase the context length even more. The memory is sort of like limited right now. We want to increase the amount of memory it holds, like to even minutes of context for driving. We're going to add audio to handle emergency vehicles better. Add like data of the tricky corner cases that we get from the entire fleet. Any interventions or any kind of user intervention. We just add that to the data set. So the scaling in basically every axis, like training compute, data set size, model context, and also all the reinforcement learning objectives.
Great. Alrighty. With that, we will move over to analyst questions. So just as a reminder, you will need to unmute yourself to ask your question. The first question will be coming from Daniel Roska from Bernstein. Daniel, please go ahead and unmute yourself.
Hey, good evening, everybody. It's Daniel from Bernstein. Elon, Tesla's share price clearly already includes quite a few of the anticipated benefits you talked about today, yet realizing what you call kind of difficult but achievable will take some time. What are you pushing the Tesla executive team to do differently now to accelerate the innovation in order to realize the value you described for the company?
Well, I mean, we're working on perfecting real-world AI and making rapid progress week over week, if not month, certainly month over month, but often week over week. I spent a lot of time with the Tesla AI team and the Tesla Optimus team. I mean, I go where the problem is essentially. Like, if something, this is, unfortunate. Sometimes I don't talk to a Tesla executive and like, hey, we don't see you very often. I'm like, that's because your stuff is working awesome. Your stuff is working really great. Unfortunately, I don't see them very often because I go where the problem is. So, we're not where the problem is. What's the greatest challenge that lies ahead? So, obviously there are many challenges with Optimus. It's a hard problem to solve. Many challenges with vehicle autonomy, but we're making rapid progress in both. Yeah.
Okay. I mean,
Yeah.
sounds like you've got a conviction that the pieces you need, right, are in place.
Yeah.
If we kind of go 12 months down the line and we look back, and you had some of those, but maybe what are the kind of 2 or 3 KPIs that would tell you that you're on track and it's going the right way, and the pieces you've put in place are the right pieces, right? That's kind of what I'm looking for. Or other way around, where would it be off most likely in your mind that you say, hey, I need to go back there and I need to change something to enable the team better?
Well, I mean, I think the predictions that I'm making here are going to be pretty accurate. And it's worth noting, so sometimes people say, "Oh, Elon's always late." Well, actually, no. The problem is that the media reports on when I'm late, but never reports on when I'm early. So sure, I'm optimistic, but I'm not that optimistic. There are many cases in the past where we've been early, such as completion of the Shanghai factory, or in fact, factory completion has generally been ahead of schedule, not behind. Yeah. But I like I said, I'm very confident we'll have released unsupervised full self-driving, fully autonomous Teslas in Austin and several other cities in America by the end of this year. That's probably everywhere in America next year, and everywhere in North America at least. I think in terms of next year, our constraint, I think, is likely to be just regulatory. Like Europe really has, for example, Europe is a layer cake of regulations and bureaucracy, which that really needs to be addressed. There's this joke like America innovates, Europe regulates. It's like, guys, there's too many refs on the field. I mean, for example, for us just to release supervised full self-driving in Europe, even though it works really well, we have to go through a mountain of paperwork with the Netherlands, which is our primary regulatory authority. Then the Netherlands presents this to the EU in, I think, May. And there's like this big EU country committee. We expect it to be approved at that time, but there's nothing we can do to make that May happen sooner. In fact, nobody seems to do. I guess all the countries would have to somehow vote in some way to have it happen sooner than May. Otherwise, it won't happen sooner than May. So then when is unsupervised FSD allowed in Europe? I'm like, May next year, maybe? I don't know. Well, I have to find out when the EU is meeting again. Sometimes it's a 12-month cadence, sometimes a 6-month cadence. Then in China, which is also a gigantic market, we do have some challenges because they won't currently allow us to transfer training video outside of China. And then the US government won't let us do training in China. So we're in a bit of a bind there. So like, bit of a quandary. So what we're solving that is by literally looking at videos of streets in China that are available on the internet to understand, and then feeding that into our video training so that publicly available video of street signs and traffic rules in China can be used for training, and then also putting it in we've got a very accurate simulator, and so it will train using sim for bus lanes in China. Like bus lanes in China, by the way, one of our the biggest challenges in making FSD work in China is the bus lanes are very complicated. And there's like literally like hours of the day that you're allowed to be there and not be there. And then if you accidentally go in that bus lane at the wrong time, you get an automatic ticket instantly. So it's kind of a big deal, bus lanes in China. So we have to put that into our simulator, train on that, the car has to know what time of day it is, read the sign. Anyway, we'll get this solved. But I think we'll have unsupervised FSD in almost every market this year, limited simply by regulatory issues, not technical capability. And then unsupervised FSD in the US this year, in many cities, but nationwide next year. And hopefully we have unsupervised FSD in most countries by the end of next year. That's my prediction with the best data that I have right now.
Great. Thank you very much. The next question will come from Adam Jonas at Morgan Stanley. Adam, please feel free to unmute yourself.
Thanks, everybody. So, Elon, you've said in the past about LiDAR, that for AVs at least, that LiDAR is a crutch, a fool's errand. I think you even told me once, even if it was free, you'd say you wouldn't use it. You still feel that way?
Yes.
Care to elaborate, or just, I have another question.
Look, we even have a radar in the car and we turned it off.
I got it. All right. So you're still, yeah. People think you're crazy, but for not.
Look, I mean, obviously humans drive without shooting lasers out of their eyes. I mean, unless you're Superman, but like humans drive just with passive visual. Humans drive with eyes and a neural net and a brain neural net. So sort of biological, so the digital equivalent of eyes and a brain are cameras and digital neural nets, or AI. So that's the entire road system was designed for passive optical neural nets. That's how the whole road system was not designed, and what everyone is expecting that's how we expect other cars to behave. So therefore, that is very obviously the solution for full self-driving as a generalized, but the generalized solution for full self-driving, as opposed to the very specific, neighborhood by neighborhood solution, which is very difficult to maintain, which is what our competitors are doing.
I got it.
Yeah.
I mean, LiDAR doesn't work in the fall, guys.
Yeah, LiDAR has a lot of issues. Like I don't have some like the SpaceX Dragon docks with the space station using LiDAR, that a program that I personally spearheaded. I don't have some fundamental bizarre dislike of LiDAR. It's simply the wrong solution for driving cars on roads.
Right. You understand how LiDAR works. I get it.
Literally designed and built our own red LiDAR. I oversaw the project, the engineering of the thing. It was my decision to use LiDAR on Dragon, and I oversaw that engineering project directly. So I'm like, we literally designed and made a LiDAR to dock with the space station. If I thought it was the right solution for cars, I would do that, but it isn't.
Yeah. All right. Just as a follow-up, at CES, you said, I'm paraphrasing, that any AI will be able to do any cognitive task not involving atoms within the next 3 or 4 years. And that would imply, Elon, that before the end of President Trump's term in office, that AI would be moving pretty damn quickly into the physical world, into the world of photons and atoms. And I'm thinking, given your work with the administration, how confident are you that the U.S. will have the manufacturing and the supply base to make good on your excitement about physical AI by the by latter this decade? We seem pretty vulnerable right now. I've seen you tweeting about, Xing, excuse me, Elon, about China. Freudian slip, about China making more drones in a day than the U.S. makes in a year, and all the entanglement of the supply. So what has to happen in the U.S. to make that possible? What's your message, and what can you do about it, and what's relevant for Tesla shareholders? Thanks, Elon.
Well, at Tesla, obviously, we think manufacturing is cool. SpaceX, we think manufacturing is cool. But in general, for talented Americans, they need to, beyond my companies, beyond me and the people and my teams here. In general, we need to make manufacturing cool again in America. And I honestly think people should move from law and finance into manufacturing. That's my honest opinion. We have too much. This is both a compliment and a criticism. We have too much talent in law and finance in America, and there should be more of that talent in manufacturing. So, yeah. I mean, at Tesla, we're making sure that we can continue to manufacture our stuff, even in the event of geopolitical tensions rising to very high levels.
Great. Thank you very much. The next question will come from Pierre Ferragu at New Street. Pierre, please feel free to unmute yourself.
Hey, thanks guys for taking the question. So I have a question, Elon, on deploying like robotaxis in June in Austin. So that's great news. And I was wondering if it means I can, drive down to Austin in June and try unsupervised by myself with my car,
yeah.
Or it's going to be more like your fleet testing it.
It'll be our fleet testing it. But that's our sort of toe in the water. We'll be scrutinizing it very carefully, make sure it's not something we missed. But it will be, autonomous ride hailing for money in Austin in June. And then as swiftly as possible, other cities in America. And I expect us to be operating, doing unsupervised activity with our internal fleet in several cities by the end of the year. Then it's probably next year when people are able to add or subtract their car from the fleet. So, kind of like Airbnb, where you can sort of add or subtract your house or your guest room. You can say like add it to the Airbnb inventory or don't add it to the Airbnb inventory. If you're traveling for a month, you can, or whatever the case may be, you can let other people use your house, and then you can. Anyway, so that's probably next year because we want to just make sure we've ironed out any kinks. And a lot of it is, it's not like we're not splitting the atom here. It's just a bunch of work that needs to be done to make sure the whole thing works efficiently, that people can order the car. It comes, it's the right spot, does exactly the right thing. All the payment systems work, the billing works.
Okay. But then, so my follow-up question would be, I have a Tesla, I have FSD, and I have to keep my eyes on the road all the time. It's super boring because I don't really need to intervene anymore. Yeah. And but the really annoying thing is that I can't just check my emails. And so, are you working also on introducing, like a kind of like free unsupervised where I could be eyes off and I would be able to check my email and would just need to, with a 5-second notice, have to go back and keep an eye on what's happening? Or is that something you're working on as well? Because it feels so close with V13 that I wonder if it's something we could expect for this year. It's a very selfish question I ask for myself, to be honest.
Yes. We need to be very confident that the probability of injury is low before we allow people to check their email and text messages. In fact, right now we're in this perverse situation, which you may have encountered yourself, where people will actually go to manual driving to check their text messages. Yep. So the computer doesn't yell at them, and then put it back on autonomous mode once they've checked the text messages, which is obviously less safe, significantly less safe than just letting people check their text once in a while without the computer yelling at them. Yeah. But we just want to be cautious about that at the advent of that. We're in this sort of, neither here nor there, but just for, I think it's not for many months longer. But yeah, we're in this perverse situation where people will turn the car off autopilot so the computer doesn't yell at them, check their text messages while steering the car with their knee and not looking out the window.
And there, like Elon said, right? If you have any problems with the system, and when people are not looking, that is a dangerous thing. And that's what we're trying to avoid. It's the capability is getting there, but it's not fully there. That's why he was using the term of dipping our toe in the water, then getting comfortable, then keep going.
Anyway, it's not far off. But we want to prove to ourselves, prove to ourselves, and obviously prove to regulators that the car is unequivocally safer in autonomous mode than not. We're not far off. So this is like low single-digit months.
To the safety aspect, we did publish our vehicle safety report today, and Q4 was one crash for every 5.9 million miles driven, compared to a crash every 700,000 miles without autopilot.
Right. So we're getting to the point where it's an order of magnitude.
Yeah, it's like 8.5 tons. So it's just about there.
Yeah,
it's amazing.
Great. Alrighty, and our last question will be coming from Dan Levi at Barclays. Dan, feel free to unmute yourself.
Great. Good evening. Thank you for taking the questions. Elon, you've talked about the need for proliferation of sustainable transport in the past as part of sort of broader push to sustainable energy. Look, I know we've heard a lot about President Trump's plans to reverse the EV mandate, and I think there's a view that given regulation is a driver of EV uptake, this could slow EV uptake in the U.S. So what would be your view on the right policy in the U.S., given your comments in the past of the need to push for sustainable transport?
At this point, I think that sustainable transport is inevitable. I'm highly confident that all transport will be autonomous electric, including aircraft, and that it can't be stopped any more than one could have stopped the advent of the external combustion engine, the steam engine, or one could have stopped the advent of the internal combustion engine. Like even if you've been the biggest horse advocate on earth, you're like a horses are the way, not these newfangled automobiles. You can't stop the advent of the automobile. It's going to happen. And you can't stop the advent of electric cars. It's going to happen. The only thing holding back electric cars was range, and that is a solved problem.
Great.
And then as a follow-up, in the past, Elon, you had made a comment that you'd be willing to sell cars at effectively no margin to get the cars out there. And there's a comment in the release today of the rate of acceleration of autonomy efforts does impact volume growth. So perhaps you could just talk about, with your efforts on FSD, how we should think about your desire to put more vehicles out in the market to take advantage of your tech advances.
So I'm not sure I understand the question. We have a lot of cars. I mean, we've got millions of cars out there.
So is your question, Dan, that how do we marry our future growth aspects with FSD?
And go ahead and unmute yourself, Dan.
Yeah, more so just how much more aggressively you would be willing to sell your cars versus in light of your improvements on FSD.
Well, right now the constraint we're trying to solve is battery production as opposed to demand. So now Q1 we've got this massive factory retooling for the new Model Y, for example, that obviously has a short-term impact on output. But the problem we're wrestling with, in fact, we're talking that the executive team and I were talking about just before this call was how we've got to figure out how to increase total gigawatt hours of battery production this year, one way or another. That's the constraint on our output.
Great. Alrighty, and with that, I think we are all done for today. So thanks everyone so much for all of your questions. We look forward to talking to you next quarter. Thank you very much and goodbye. All right.
My God. I'm embarrassed for the analysts. I am just so embarrassed. The worst set of questions I've ever come across. I mean, you're muted.
Is it that they? Is it
talking
that they're
about
following?
LiDAR?
Is it that they're following too many companies, or that they just don't get it generally?
You're right, Brian.
yeah,
You're right.
yeah.
They give
They
it
don't
5
get
minutes, and did they meet their margins? Did they get the volume? Blah blah blah, and they're done.
And
Okay,
they'll
guys.
start paying attention again in 2 months.
Yeah.
This was I take it. I now think that this Q4 call was better than the Q3 call. It is ridiculous. He basically said that we're going to be having epic 2026 and ridiculous 27 and 28. They said, right? FSD, it's going to be unsupervised FSD commercialized, will be launched in June in Austin.
Austin.
That is June. And
Yeah,
he's
we should all
confirmed that
come
that's
down
happening.
to Austin. We should all come down to Austin in June to rent our Cybertruck. To take our
Cybercab, or
ride
no,
on
the
Cybertruck.
Model Y. No, you cannot rent your own cars until next year.
No, I mean to hire a Cybercab.
Yeah.
The Model Y Cyber.
I mean, there was just so many things he said, right? Production version 2 of Optimus is going to launch next year. And then it's going to be like 10,000 units per month. That's the production line that they're going to be working on next year. So it's sounding very, very like he was very specific about things coming out.
I don't understand why the stock didn't hit $500.
So I was thinking about that, Larry, and I think the answer is it's the same reason it was only at trading below 200 2 splits ago, when a lot of us could see this coming and nobody else could.
Yeah,
I think Wall Street needs to digest these waves are imminent. This wave of autonomy is now. There's a month tied to it. It's June 2025. It starts with Tesla's fleet, and then it just keeps growing. And then the second wave, it looks like it's going to start overlapping it, which are Optimus bots doing work that either takes Tesla's cog structure down, and then eventually goes out to external customers a year later. So Optimus was I think we have to keep beating this drum. This is a pull-in from the prior earnings print, and it's very clear that it's not so much the calendar number they're focused on. They're focused on getting it to a particular monthly run rate at a particular point in time, and that's all they're focused on, is building out the supply chain and the autonomy to allow it to do that.
Yeah, it's all about autonomy and the bot. That's just it. Autonomy in the car and autonomy in the bot. But you're right, on Wall Street, they need to get their act together. I mean, these analysts that we had today are the best. Those are the ones that cover Tesla and write pages and pages about it. And I've hardly heard dumber than dumb. I mean, this was crazy bad. This was crazy bad. I mean, there was not one question, not one that had any merit. Let's not talk about LiDAR. Let's not talk about LiDAR. It's
LiDAR.
In fairness, Alexandra, I call them anal cysts for a reason. It was embarrassing. However, there was one good question, and I'll give it to Bernstein. What is the executive team now focused on to realize the value described? I thought that was good, and his answer was perfect. The goal is to perfect real-world AI, etc., Optimus FSD. That was the goal. So Bernstein did have a good question. The rest of them were so redundant. I was like, am I hearing this straight? And I had to try and back up the video and listen to it again. It was crazy, crazy silly.
Well, the only thing I would give them credit on too is it looks like the questions are starting to transition more to the future and less about why are you at 16.3% versus 18% gross margin. So I think we give them a little bit of credit. But I mean, Tesla put it out there multiple times on the call that they're cell constrained this year. I mean, they obviously want to continue to build and throw off cash to fund, autonomy. And I would want to, if I were them, I want to know, okay, well, are you growing 10, 20, or 30% this year? You said you're supply constrained. How much are you supply constrained to? And what's the plan? I would have asked that question. It would be great to hear an answer.
Completely agree. On the battery supply, we're a little bit dry on what's going to happen? Are we just going to accept that? The other feeling I clearly had is just forget about good financials this year. That just and the best thing is you better get used to that. And I liked him being honest about hardware 3 only becoming upgradable for those that had locked in FSD. I liked the honesty about it. But boy, oh boy, am I glad I don't need to sell a hardware 3 car now. I mean, they're going to be bitter for more than one. They just lost a lot of their value. So that's just it. But
yeah,
but
they
I
do it
mean,
for free.
They're going to
is what
upgrade
it
them. They're going to
They're
upgrade
doing
them.
it for free.
If you bought the FSD, they will upgrade it. But if you didn't buy it now, and then they will upgrade it. So it's
let me throw this one out there. What happens if people heard that have not purchased it? I see Jeff gets this.
I've got one of them.
And they're coming out and saying, you know what? I have a hardware 3 car. I've been subscribing to it, and now I'm going to purchase it.
Exactly. I'm going to do it. I've got one that's Model 3. I'm about to buy $8,000 now. I'm going to do it after I hear this.
But did you pay the $199 a couple of months ago? Well, I did, right? I mean, mine is leased, so it's a different case. But for people who have paid the $199 and are paying $8,000 now, well, they threw some money out of, right? That's just it.
Okay, let's get back to the big points, guys.
Yeah.
Well, at Machine, what's his name? M for Machine was right all along. But guys, I want to just read this to you. Gary Black posted at 5:26, quote, "I'm not sure why Tesla stock is up plus 3% after hours at this report, as they missed every 4Q metric, and the 2025 volume outlook seems lukewarm at best."
We don't even need to mention that name on this channel
anymore.
He's a car guy.
But he did go on to say, that said, the strategic priorities seem on track, which is likely why Tesla is up. The point I want to make based upon that quote is this is where Wall Street is in their heads. So that, they're only beginning to make that transition, the sort of statement at the end. So we shouldn't worry too much about Wall Street or the price reaction tomorrow. What we should take away from this is we are on track. In fact, we're probably ahead of our track that we all had in our head, because if they're actually going to launch in June in Austin, that is a huge win. Win in terms of timing.
That prior guidance was second half of the year. So that, I can't imagine. Do you think an analyst is actually a major analyst is going to downgrade based off of this earnings call? I don't think so. I think they're all more of like pointing towards the future. Who knows? There may be someone in there, but I think Alexander said it right. I think you're going to have choppy, this 90-day hamster wheel for earnings thing. It's going to be choppy, but I think the more important takeaways are going to be are these major waves coming? Are they on track? And if they're on track or they keep getting pulled, look what just happened. Unsupervised pulled into June. There was never a June date before. And then Optimus, there was never any mention of pilot production in their earnings release until this earnings release. So they took the two most important forward strategic things and they've essentially reaffirmed them and slightly pulled them in. So I think that's the reason, one of the major reasons it's up.
Oh, for sure. The big move was in my opinion too. As soon as they said June FSD, Robotaxi, Austin, that's when we're doing it. They announced it. That's huge. It's huge. That was what knocked it out of the park for sure.
Yeah, there was another thing mentioned. Did anybody pick up on it? He said a third Megapack factory.
Yeah.
Yes.
Well, he said a third factory, but it was in the context of Megapack.
Energy. Yeah, he was talking energy storage, a third factory.
Megapack.
Yep.
Is that Indonesia, or does anybody know where?
No, he didn't say.
No.
He didn't say, but I put it in the notes. I mean, it was a huge announcement that just he just did it by the by. Listen, I asked I posted during the call. Elon Musk, when can we have the next battery day? I think we should all push that. I think we really need to get an understanding of what the battery strategy is.
Well, Larry,
so-
they just had a meeting before this earnings call talking about the battery constraint. This is now
Yes.
top of mind. That is the negative thing that happened today. Is we
Oh,
learned
so-
that there is battery constraint, and
Yes.
they're trying to still solve it. And that's why we did not hear them say 20-30% growth.
Right.
So
Yeah,
I
I-
do
I
want to
can-
add some. I want to add some context on the third factory thing. The context was he said, "Here's the Megapack factory. There's the other Tesla factory behind it. You can see, and there'll be a third factory." So I read it to mean, I took it to mean there will be a third factory for something in China. And I don't know. Would that be Optimus? Would it be Cybercab? I'm not positive. I'd have to
I
go
mean,
back
you're
and
talking in
review the
context of-
tape.
His context was the
but the-
battery factory. His
Yes.
context, yeah.
Okay, we'll find out.
Yeah.
But he said it's next to the other factory. So in that regard, he was. I
No,
mean,
it'll have to be somewhere
What-
local
all right.
in Europe.
If I could
All right.
speculate, regardless of how many,
Please.
it doesn't actually matter how many factories. It's more about this cell constraint. If I could speculate, because I've been talking about this for a couple of months, I actually think when they made their forward plan for 2025, I think what they're starting to do is they're starting to do a tariff overlay, and they're starting to lock in scenarios and say, hey, look, like we're probably not going to be importing LFP into the US. Okay, what's our US production LFP plan, and when does it likely catch up? I think LFP is part of this problem. I wish an analyst would have asked the question, because I think it would have been helpful to understand, because there's plenty of cell supply elsewhere in the world. I honestly think that there's an LFP issue for Megapack that's gating Megapack, and there will be an LFP issue for the low-end automobile segment until they solve it with their own localized production solution. And then, of course, all the 4680 issues. I wish they would have gone to that, because that's going to honestly gate 2025. And who knows how long does it gate part of 2026? Does it gate Cybercab? Does it gate the bot? We don't know yet. It's all speculation.
And this goes to the question I had for CERN a while back about what will have to be cannibalized. Okay, they've got Optimus, they've got cars, they got semis, they got the mega packs. All of these are sucking up maybe a finite supply of batteries. They have to start figuring that out. That all of a sudden has become a limiting factor once again, I believe.
Yeah, he said, right, that there's a choice between stationary batteries or mobile
Yes.
batteries.
Yep.
And if you look at CERN has a beautiful chart where he showed that the profitability of each of these the robots kill megapacks. So if I was Tesla, I choose cars and bots.
Optimus uses very few batteries. Very few.
Yeah, the other huge news was the multiple OEM licenses we heard before, which is massive. And then there was
But in that regard, they confirm what I've been saying, that there's actually a rush of people coming in. They're choosing who they want to do, and there's multiple of them.
Again, it has to be somebody big enough. So big enough means what? Hyundai or a Chinese. And I was just thinking this thing through with the battery factory. Could it be that the third battery factory is again in China, because that's where they have the batteries? That's where no tariffs will be imposed. That's where they can, use them immediately, and where the market is endless. So I think that's, in my view, the most likely location for the third battery factory.
The concern about China, though, just in global supply chain, is just if something happens, everybody's trying to get redundancy with China right now. But I agree with you, like the demand is growing. It's just, I think people are trying to figure out, how can I localize supply of these big, heavy things? And how can I put myself in a position where all my major factories have local supply around it? And I think the US, they have a serious problem because they don't have 4680 at scale, and they don't have an LFP solution. And I think therein lies the limit.
Yeah.
The
other good news
for the case of Champagne on a bet with Alexandra that the next battery factory will be in Europe, not in China.
No, I'm not betting. I want that case first.
Send the case you owe her.
Not betting
So
around
wait,
that case.
okay, the bot. Internal plan is 10,000 robots this year. We will succeed. Will we succeed? Probably not. But will we succeed in several thousand? Yes. Will they be doing useful things by the end of the year? Yes. So the internal plan is 10,000 bots per year this year.
Yeah. And then 100, and then a million, 100,000.
The rate, the production rate, the rate is to get to a
500%.
10,000 annualized rate by the end of the year. We may or may not get there, is what they said, but it'll be several thousand, and then get to a 10,000 per month
Jeff,
annualized rate.
He said their internal plan is 10,000 robots this year, with the rate is 1,000 bots per month.
Yeah, that's the same thing. Yeah.
No, but I
yes.
Well, guys, I'm gonna say good night.
We love you, Larry. We're so glad you could join us.
Larry.
Well, send me that case.
There was another good piece of news too for viewers all over the world,
Thanks,
Europe,
Larry.
Australia, etc. And they said unsupervised FSD is coming to the rest of the world in 2026. So for those who have been waiting, that was also good news. Did anybody
I
else
got to
pick
jump
up
pretty soon too.
Just back to the bot numbers, he threw out a number of revenue north of 10 trillion. Right, so you do some math on that, and you figure out how many bots that might be. So let's just say bots as a service that they're getting only $25,000 a year. Now, of course, we know it's going to be driven by market prices. It's going to be much higher than that, but 25,000 bots, sorry, $25,000 per bot per year. You need a fleet of 400 million bots to get to 10 trillion in revenue.
Well, he confirmed what you've been saying. Price of Optimus will be set by market demand.
Well, it has to be. Otherwise, you've got a black market.
No, but everyone else out there has been saying, oh, they're going to sell the bot for $30,000. And you've been saying, not the first several years. They're going to sell it for
several years, it's going to be
market demand.
Yeah.
And so market demand could be over $100,000 or more per bot.
You
So
mean
if it's
I won't have
100,000, you need a
bot
fleet
earning?
of 100 million only. Right, and he's talking about making 100 million bots a year. So his number of 10 trillion in revenue is in the early years, not a 2035 number.
Yes, I missed that. Do you remember when he said it will be as much as the 5 biggest companies together? For what year? Was that like 2035 or what was?
He didn't say.
He didn't say, and of course it's a moving target, but right now those companies are worth $15 trillion.
Yeah.
And that if bot revenue is 10 trillion or even less than that, Tesla is easily a $15 trillion market cap company.
Even more. Yeah.
His actual words were several times more than the top 5 companies combined. Several times more than the top 5 companies combined. And we see a path to that.
No, but CERN, what do you pay for? What do you pay for a company that's growing and generating 10 trillion?
Well,
money.
If it's 10 trillion in revenue, I guess the question is, what's the profit? Let's say it's 25% profit margins, two and a half trillion of profit.
Assume it's reoccurring revenue. I'm going like you go into like 5 to 6 times revenue easily.
And in the early years, it's probably 10 times revenue.
Trillion. Yeah, 10 times revenue early years, exactly. That's where it just gets nutty. You're talking 50 trillion.
Yep. The numbers.
I can't talk to my clients about this. How about you, CERN?
I talk to them about it, but I don't throw out those kinds of numbers.
No, exactly.
Even conservative numbers start looking truly mental very quickly. And I know I've talked with CERN and Herbert and some others. And what I say is we look at these models together and I go, you understand that the numbers you're putting in are very low numbers. And you say, yes, but if I put in the real ones, I look like a madman.
Well, we look like a madman even when they're the low numbers.
Yeah, that's true.
But the supply chain for bot isn't a given. It has to be developed.
Yeah.
And who knows what the constraints on that are going to be for the first couple of years. Yeah. So that'll be an interesting one to watch. And of course, they're going to have to localize supply. There could be regulatory issues with just it's one thing to be able to produce that many, but then how many regions or how many actually accept them and allow them for use. So they're going to be labor issue. So there's a number of things I think that people should keep in mind that could kind of, be a regulator on that, but it's fun to think about. And I think they should be shooting for the moon.
Quite literally.
It's the product that redefines everything. It's the perfect application for real world AI. Autonomous vehicles are great, absolutely amazing, but they will pale in comparison to what the bot will accomplish.
Correct.
Yeah, and again, to Jeff's point, it may be delayed. It may be 4 years from now before they really start to pump these things out.
Yeah.
Okay, guys.
I
thank
gotta
you.
bounce, guys.
Yep, let's go. Fantastic hours. Appreciate the panel here.
Thanks,
the
Herbert.
best. The best
Thank you,
retail
guys.
panelists
Everyone.
here. Honestly,
You guys are awesome.
You guys are the best. I appreciate everybody. Great call. We will examine some more. We'll come back with additional shows to really figure out what we heard here. But thank you, everybody, for your time.
Tomorrow,
appreciate
9
it.
o'clock.
Thanks.
Tomorrow
all.
morning at
everyone.
9 a.m. Pacific time, we're doing a Cyber Bulls live stream. This will be the main topic again. Thanks,
Sleep on
everybody.
it.
Thanks,
Okay.
everyone.
Bye, all.
Have a good night.
Thank you.
Bye.
Right.